My name's Kevin Clouden. I am chair of the BizFed Institute board and executive director of MI Finance and chief global strategist at the Milken Institute, which is a nonpartisan, nonprofit economic think tank based here in Santa Monica, but with offices in Washington, D.C., New York, Miami, London, Singapore, and so on. So we are both global and local. And for us, and for me in particular, this is an incredibly important issue. For those of you who may have run into me sometime in the past, you'll know for a number of years I ran our California Center, and in particular am and continue to be incredibly focused and interested and motivated by the fact that California, even when it seems to do well, even when the coffers are full in Sacramento, even when everything seems to be going well in terms of creating shiny new jobs, is a difficult place to be. It is not a difficult place to be because of the weather, although I will note that it does help precipitate fires, and in fact, climate change is something that is on the agenda for today when we talk about insurance. When we look at California and you look at it in terms of real estate and just how much it costs, and in particularly since the pandemic, how hard it is to buy a house, how hard it is to attract and retain workers given that. Looking at the regulatory environment, California is a difficult place to navigate. I can go ahead and throw the figures out and tell you that if you're middle class, living in Texas is actually more expensive because I have a lot of numbers that could convince you of that. But if you're in the upper echelon, if you are working class, it's easier to be in Texas. It's actually cheaper. But if you're a business, it's much easier to do business. Say whatever you want and say in terms of consequences, navigating regulations, navigating taxes, navigating insurance, navigating the various issues of doing business in California is not easy. And one of the things that's been so hard for all of us over the years is that we want to preserve California the way it is. We want to preserve the environment, we want to preserve the lifestyle, we want to preserve the quality of life, all the things that we perceive, all of the diversity, all of the entrepreneurship, all of the different elements that make the world still want to come to California. The biggest single reason that California's population dropped for the first time in over 50 years a few years ago was because immigration stopped. It stopped because of some of the White House regulations. It stopped because of the pandemic. But people want to come here. People want to come and attend our universities. People want to come and start businesses here. I have conversations all over the world of people who want to come here, but then they get here and they realize it's not easy. And yet they still want to stay. But if we want to build and grow that environment, if we want to address the fact that our retail environment is hollowing out, how much do we look at in terms of issues with organized theft rings that we started seeing during in the pandemic and coming afterwards, where we see this hitting retail, we hear reports of it now striking homes, we see things in terms of the fact that minimum wage levels in California are obviously higher. The rest of the country is starting to catch up to us, but the fact is minimum wage laws are what they are here, and especially if you happen to run a fast food restaurant, but they are because the cost of living is so high. It's a cycle that we're essentially stuck in, and how do we address it? How do we make costs, make everything more effective? I had a conversation a number of years ago with the mayor's office and some of the key officials in New York City, and they talked, and the conversation was, how do they attract people to a city and a location that's more expensive and more difficult than California? And they said value for money. They said that the key to New York, when it succeeds, when it fails, is whether or not people perceive that they are getting the value for what they are putting into it. And in this conversation here, when we talk about business resiliency today, and what drives us at BizFed Institute, what drives us in terms of the environment here, is that we want people to feel like they get something back for what they put in. And what we intend to do in the conversations today, what we intend to do in all the BizFed Institute conversations is to drive forward that idea that if you're invested here, you get something back for it. And we especially want you to feel that way for being here and in these conversations today, and for anything you do with BizFed and BizFed Institute. So for that, I would like to say that I'm grateful you're all here. This is going to be a couple great conversations. We have a great keynote speaker in Ricardo Lara. We have a number of important ideas that will come up, but the key for us is that you'll be able to act on them afterwards. And to go over the program for today, to go over why this matters and what we're doing, I will turn things over to my fellow Kevin Harbour, who is the head of BizFed Institute and a champion as well for making sure that business stays here and thrives in California.
Thank you, Kevin. As Kevin Clouden said, my name is Kevin Harbour. I'm the president of BizFed Institute. I know a lot of people know about BizFed, aka LA County Business Federation. We are the think tank arm. We're a 501c3 nonprofit. Our charter is to convene forums and programming around issues and opportunities that affect the regional economy. So in doing so, our strategy is to bring in stakeholders, people such as yourselves. As Kevin said, our focus today in panel one is going to be insurance and taxes. We all know that these are areas that are rising. Some feel out of control. When you look at small business and even medium and large businesses, the idea is to try to control your expense line. When there are variables outside of your control that impact your expense line, we have to come together and do something about it. You could either complain or you could be here today. And so I applaud all of you change agents, right? We're going to carry on polite but impactful discourse. The whole idea is to figure out, we all know what's wrong, but we're going to come up with some solutions and ideas on how to fix what's wrong. And so it's going to be interesting today because we have as Kevin said, the insurance commissioner, California State Insurance Commissioner Ricardo Lara. And we wanted him to get here a little early. I know probably some of his people are here, but he's going to hear firsthand, because after we finish the day, we do a newsletter publication with key takeaways and the recording, as you see right here. We got Chris Lancaster, CEO of, raise your hand, Chris, Civic Publications. And he has gratefully partnered with us. Not only does he bring a videographer and his team, but he has a business that has 500,000 people outreach and does a digital magazine for the LA Times. And we have some grateful sponsors, and we're going to talk about that. I got one more minute. Blaine Barker, he just walked out the door. He keeps me on track. So folks, again, I want to thank you for being here, because again, what we want to get out of this is actionable items. We purposely put together a list of people that we wanted to invite. All of you are professionals in the industry. And all of you, I hope will stay for the duration, because we're going to do networking afterwards. I want to see business cards being passed. I want to see conversation going back and forth based on what you hear today. And again, I want to thank you all for everything that you do. And I think the next thing we want to do, Blaine, is, are we going to play our sponsors? Our sponsors, okay, Blaine's getting a shot of me so I can brag on social media. But we really, again, appreciate everything that you all do. Small business, you employ 80% of the employees, 80+% of the employees in California. And it's just so critical for you to be here. And again, I applaud you in taking the time out of your day and to be here. I just want to give a shout out to all of our sponsors. Will you stand up, please? All of our sponsors, stand up and get a hand. Give them a hand. All right. Thank you very much. So we're going to go ahead and get the show on the road. And I'm going to introduce our moderator, Luis Portillo. Luis and I served on the California Jobs First Steering Committee. I just finished my one-year term as the chair of the steering committee, but Luis was an active participant, We spent the last 2 years working together. He is the president and CEO of the San Gabriel Valley Economic Partnership. He's been in that position since 2021, has about 18 years. I know he looks too young to have that many years, but 18 years experience in the nonprofit sector. Previously, he worked as the director of public policy for the Inland Empire Economic Partnership, where he managed the organization's advocacy efforts. While he was there, he established a grassroots coalition that brought together more than 20 business organizations throughout the Inland Empire to advocate on behalf of pro-growth policy. So who better to moderate our first panel? So Luis, come on up, and you can introduce and bring up your panel one at a time. I'll give you this.
Thank you, Kevin. So thank you, everybody, for joining us here today. We have a really great panel for you to talk about some of the major issues that are impacting our communities. And so at this moment, I want to call up our panelists, have them come up. And let me start with Bob Calista, the Southland Regional Association of Realtors. Rick Curtis with Farmers Insurance. Nancy Hoffman Vaniek, the president and CEO of the Greater San Fernando Valley Chamber of Commerce. And Althea De Pietro, the chair-elect for the Building Owners and Managers Association of Greater Los Angeles. So if we could start with just kind of everybody, take about 2 minutes, say a little bit about yourself, your organization, what you do, and...
Good morning. Oh, okay. Thank you. Good morning, everybody. I'm glad to be here this morning. My name is Rick Curtis, and I am a farmer's insurance agent. I've owned a farmer's insurance agency here in the city of Inglewood for the last 22 years now. In addition to being an insurance agent, I'm also a licensed real estate broker. I've got a small boutique real estate company that I run out of the same office called JCL Realty and Investments. We specialize in a specific discipline of real estate. We do conservatorship, trust, and probate real estate. So we work with fiduciaries, attorneys, accountants, and they bring us in a lot of times when there's an estate that has real property and there needs to be some sort of disposition with that property, whether it be sold or some sort of heir buyout. And so I've been doing that since 2005. On the insurance side of my business, we specialize in personalized insurance. So home and auto, commercial, Main Street type of insurance. So I am very happy to be here. Born and raised here. Went to school a few minutes away from here, graduated from USC in 1996 with a degree in public policy and management. Yes, fight on, those Trojans. And and it really am a, I feel that my purpose here is to serve. So, the type of things that we do in my office, we make sure that we come up with solutions that are tailored directly to meet, the challenges and the objectives that our clients have. So I'm looking forward to this discussion. Thank you, Brother Harbor, who is my fraternity brother, for inviting me to this event, and I hope to gain as much knowledge from everybody in here as I'm able to share with you guys. Thank you.
I'll pass this over to Bob. Hi, everyone. I'm Nancy Hoffman Baniak, and I'm CEO of the Greater San Fernando Valley Chamber of Commerce, which is a small suburb of Los Angeles of 2 million people, just on the other side of the 101 freeway. And I have been at the Chamber for 37 years, 3 name changes. We started as the Van Nuys Chamber in 1911, merged with the Panorama City Sepulveda Chamber in the 80s, and eventually, as communities changed their name, we became a regional chamber. And I was definitely the big part of that growth. What can I tell you about me? That's kind of it. I mean, I'm only 60, so I've been at the chamber, over half my life, adult life. So all I know is business. And so I know, why is this doing that, Blaine?
want the other one? Yeah.
Is it the microphone? Am I on? Yeah, I think the other ones have to be off. Yeah. I know your pain is business people. And I think our goal at our chamber is to make sure that we're your business's best friend and that we're here to be your solution finder and find the solutions to the problems that keep you up at night. One of the things that I'm very proud of in our organization is that we're kind of like red tape busters and concierges. You have a problem, you come to us, and we're going to find a way to fix your problem. We've literally helped every brewery in the San Fernando Valley open their tap rooms. We actually got law changed in the city of Los Angeles, all because one small brewery came to us and told us about what the issues are. And we didn't know this. Interesting fact. In LA, there's categories. So a brewery is a brewery. It doesn't matter if you are as small as this room or you're Anheuser-Busch. And they pay the same licenses, taxes, and fees. So we were able to fight that and get it changed. So if you have a problem and you already belong to a chamber, go to your chamber and see if they can help you. And if you don't have a chamber you belong to, just call me and we'll see what we can do for you. So I'm going to pass it on to Bob.
No, just give it to me.
The dead one.
Can you hear me? Okay. So my name is Bob Carlson. I am currently the president of Southland Regional Association of Realtors. We are 11,000 member organization. I'm also the owner of a company where we do commercial residential property management, land development, and we provide consultancy for corporate bodies in real estate. My own background is I've been 27 years in the Air Force in India, and then I flew for United Airlines and then got into teaching because the principal of Monroe High School asked me to fill in for some time while I was doing real estate, and then got into full-time real estate. While flying, I was flying globally, so I do have the ability to look at things globally from a 30,000-foot perspective as well as down in the weeds, and I can switch roles instantly. Insurance is a major issue right now in real estate, and I have to thank BizFed for having selected this topic because the number of transactions that are getting, which are going south or not going the way it is intended, or sellers of properties can negotiate because buyers are coming up stonewalled on the insurance requirements or lack of insurance. I think this is a really appropriate time to discuss this, especially with Commissioner Lara, whom our association had an opportunity to interact some time back. So I couldn't ask for a better forum and ready to contribute and learn. Thank you.
Well, good morning, everyone. It's a pleasure to be here with all of you today. I'm Althea De Pietro with De Pietro Holdings. It's a third-generation family business that owns and manages office, industrial, and retail properties. We're based in Pasadena. I'm also here, though, as a representative of Building Owners and Managers Association, BOMA, of Greater Los Angeles, where I am the chair-elect for the board there. I'm also involved with the board for BOMA California and Los Angeles County Taxpayers Association. And so that really advocates for taxpayer protection and government accountability. So I'm so happy to be here, and I think the big push I'm going to probably have is the importance of getting involved. And one last thing I feel I have to add at this point is that I too am a graduate of USC, so fight on.
Well, thank you to all our speakers. I'll start with Bob first. I think this is really timely forum we have right now. We have 3 massive wildfires going on in Southern California. And oftentimes we've seen a lot of people face significant increases in insurance, specifically for home. What are you seeing? How has that impacted your ability as we're trying to build more housing, we're trying to get more people into homeownership opportunities, and how have you seen the increases impact just people in general be able to own a home or be able to live in California?
So primarily when you have fires or you have any issue, the first impact is on insurance providers. They tend to back off because of the risk associated with covering the areas which are impacted by either climate change causing fires or climate change causing flooding or some other natural phenomena. The issue that really is where we've landed up today is that the modeling that is used by the state for determining the rates or approving the rates, that's static modeling. Static means you have past data and then you make future projections. So it doesn't cater for real time, it doesn't adapt itself. And so static modeling is also a form of regression analysis where you're taking data and you're projecting it forward, and that does not work, especially when you're impacted by climate change. You need dynamic modeling, which is a little more complex. With computers, you can get these solutions faster. The issue that comes here is, and that is where you don't, when the rate filings are done across the country, you expect a response from your insurance department within 30 to 60 to 90 days. In our case, it's taking a year, in some cases 2 years. The reason behind that is because you've got Proposition 103, which protects the consumers, that is each one of us when you apply for insurance. But what it does is it also creates interveners who represent the insurance industry or the stakeholders. And now with so many inputs coming in and processing, trying to please everybody, the rate filings don't get approved. That in turn impacts us. That's one. The other one is affordability. Because insurance companies start withdrawing when they don't see the rates getting approved, Fair Plan comes in. Fair Plan protects you against nothing except fire. It doesn't protect you for liability. It doesn't protect you for flooding. It doesn't protect you for mold. It doesn't protect you for vandalism. So just hope that your house gets gets taken down by fire and not a flood or vandalism or something else, because Fair Plan won't cover it, which means that when you're forced to take a Fair Plan, you have to rely on other insurances to back you up. So your affordability goes up. The moment affordability goes up, your debt-income ratio changes. The lenders look at your transaction or your insurance requirements are now upping the amount of money that you've got to come up with or what you're going to be required to pay on a monthly basis. And that lowers your qualifying ability, which makes it more difficult for you to afford to buy a home. So this is kind of it's like a catch-22. That is, a lot of you understand catch-22. So it's a typical catch-22 situation. Where do you really start? And the real solution would be dynamic modeling. And in short, that's what I would recommend.
And actually, so that brings us up to something that's unique to California. We have Prop 103 that was passed by voters, and that really affects it. I was kind of curious for Rick, maybe you can talk a little bit about that, how that's impacted California's ability to get affordable insurance, and what do you think things that come to mind that could help correct some of those types of challenges?
Well, you got to look at the history of Prop 103. Prop 103 was passed back in the 80s. I think it was 1988, and it was legislation that was passed to protect consumers against how insurance companies operate. So how they set rates and their business practices. But it was also designed to create a fair market of the insurance companies being able to compete. And what we've seen over the last 7 years is modeling that does not work anymore. That modeling that needs to be updated. When you look at the wildfires that have devastated California year after year. You look at what COVID has done. Shutting down the world for 15 months, causing supply chain issues. The cost of labor has increased. The cost of claims have risen. And what we've seen from the insurance side is that the premiums have not been able to, insurance companies have not been able to take the appropriate rate to cover the cost of claims. And insurance companies, they're unlike utility companies where they're not required or mandated to be here. They are for-profit, businesses like us. And so, when they're working in from legislation that is, antiquated, we get things like, insurance companies either tightening restrictions by pulling out of the market. You've got, 7 of the 12 largest companies here in California are no longer, either doing full business of some sort. Either they've paused or either they've pulled out completely. And, people say, well, insurance companies are, profiteering. And if that was the case, there are a ton of insurance companies, I believe, that would be willing to step in and take the business from, the carriers that have pulled out. You really have to look at, the modeling, and the modeling is something that needs to be corrected,
That kind of brings us to an issue, which is, whenever we see issues like this, there's a desire to want to do something. Yet sometimes we not fully understand how it works or what, how the industry operates. And so I'm kind of curious, for Nancy, what can we do? What can the business community do to kind of help better educate elected officials to get, or if at minimum, get them to talk to us so that when they're looking to do legislation, whether on insurance, whether other things that impact businesses, to understand how the system itself works, to understand what's going to work?
Well, before we get to that, don't forget you need to vote in November, because that, I think, is one of the most important things. Because who you put in those seats are the people who are going to make these decisions. So a little story here. I was in Sacramento with actually someone from State Farm. And we were on a lobbying trip, and we were talking to a legislator, and he was not authoring this particular bill, but it was an insurance bill, may have had to do with health care, I don't remember exactly. And he actually wasn't really for the bill, but he was one of the proponents of it. Like, he was the second on the motion to move it forward. And I said, why would you do that when you know there's all this opposition? And he said, well, we need to start the conversation. And I said, but this isn't Robert's Rules of Order. You don't need a motion and a second and discussion. You could have came and talked to the people it affects, and then made this decision whether you wanted to second that motion on that legislation, or if you wanted to talk to the author about amendments. And he didn't understand that. And by the way, this is someone I really like and respect, and was my personal assembly member. And I did not vote for him next time. I just want to say that. But that is not a silo thought. That's how they're operating in Sacramento and even in Los Angeles and around the area. They feel that they need to jump on this bandwagon to move things forward, but they're not going back to the business community or even the industry that it's affecting to find out how it really affects the bottom line, who it affects. So what could we do? Well, first of all, we definitely need to have a better voice at the table. And this is where I think unions really excel. They have members, and those members, they're not going to do this, we're going to go strike. But us business people, we're at work. We don't have time to fly to Sacramento, hop on a Zoom and sit there and listen to testimony all day, even go down to LA City Hall or the Board of Supervisors. We don't have that time. So we need to start meeting with our legislators in district if we can. Find the right person on their team. It's really the boots on the ground people. You could talk to every legislator you want. But if you don't get down, and I'm going to pick on Monica here, she's been my boots on the ground person from the Board of Supervisors forever. If you don't have that boots on the ground person that you could have that honest conversation with to help move that needle, how I got that needle moved for the breweries was I called every single planning deputy at every city council office and put them at a table. And then from there, we were able, because one of them got a meeting with the Mayor's Office of Economic Development and moved that needle. So we have to have that voice. And sometimes we just don't have time. And if you don't have time, you have BizFed, you have chambers of commerce, you have associations that you belong to for your industries. You need to go to them and tell them, hey, this is affecting me. Because if you don't tell them, how do we know? Yep, so.
We've talked a little bit about the housing and how increases in insurance have impacted that space. I'm curious, Althea, for the commercial properties, what are you seeing on the ground? What are you seeing its impact having on existing properties, but also properties that are looking to be developed and new opportunities brought online?
Yes, so I mean, obviously, this tends to put a big halt on what people can go ahead and move forward with when it comes to development, the transactions of properties. I mean, I could even, since we do a lot of ownership and management, even with, I can talk to businesses and trying to have tenants come into your space. Everyone is very concerned as to whether to expand, to decrease, how to address what is occurring. So you want to, one of the things too that we're facing is you have these increases in permit costs, that the permit process, it elongates everything, it affects your project timeline, it affects your bottom line. Again, it's a matter of, as Nancy was saying, to try to get out there and really meet with people and tell them these problems. For BOMA GLA, we have a good relationship with the LA Department of Building and Safety, as well as other cities around the LA county, and trying to form those relationships with the various people that work there. There's a lot of times where you go in there and you're talking and you feel like you're not being listened to, but you have to keep going in there and talking, even if you feel that's the case. And really try to form these relationships with people in those departments.
Bob, I want to go back to something you said, which is kind of shocking when you think about it, that California is probably one of the largest markets in the nation, yet you have a number of insurance companies who just said, we're not doing business there anymore. What are your thoughts on that, and how does that impact other folks who are trying to get coverage for their properties?
So that's an excellent question. So insurance companies are going to back out when the risk becomes too high, because when they look at the claims made and they have to stay in business, then they start backing off, and then you have to rely on the companies that are left. And now remember, the rate plans still haven't been approved. So the way we are reacting, or the state is reacting on the rate plans that rate filing that I've done, is on a reactive basis, not on a proactive basis. So there are multiple ways that this has to be resolved. First of all, Fair Plan should start operating in areas where they typically don't go. Now remember, Fair Plan, for those of you who are not very familiar, that Fair Plan it has its corpus contributed by all insurance companies based on the business that they do, the claims that the servicing that they do in the state. Now, if they start backing off and they don't do business, your Fair Plan is going to get stressed. Or let me rephrase that: has been stressed, and you don't have any funding coming from the state. It has to come from the insurance company. So you are now really looking at a doomsday scenario. The other issue with this is we have a regulation here, which is we make laws, and then we blame the laws for not being able to move forward. So we have a federal law that the insurance coverages that will be provided will be from US-based companies, except for reinsurance, which is done by Lloyd's in London. You need to get in global competitors come in here to provide coverage, because that increases the availability of business. We need to get over that, because otherwise, if you're restricted to where you are and you have no way out, then you're staring at something where the premiums are starting, they've already gone high, they're going to go even higher, or you will not have the coverage, and then you will start seeing foreclosures or other issues coming up. I want to address another thing, which is not to be treated in isolation. As of July 31st, there are roughly about 856 commercial properties that are coming up with their loans due for refinance next year, which, as it is, are likely to go under, because their insurance, the mortgage rates are between 2.5% to 3%, and now the refinance rates are anywhere from 7% to 8%. Most of them won't be able to afford a refinance. That's a huge issue which is going to prop up next year. Tag on insurance costs or lack of insurance, and you see the problem where it is. So we can't approach this as an isolated item. It has to be addressed as a collective issue with all stakeholders that are participating in it. And one of the ways is that you have Prop 103 that was said. Prop 103 is fine. It's in the implementation of Prop 103 and the way we've got it bogged down that it takes so long. We need to get together there are 4 stakeholders in this: the insurance companies, the elected officials, the regulatory bodies, and the people who require insurance. All need to get together to make sure that we can get around Prop 103, protect the people, but at the same time ensure that the intention of Prop 103 is still seen through and attract more insurance companies to do business.
Thank you. I'm kind of curious, are there any other efforts underway to diversify who provides options for providing insurance beyond the FAIR Plan?
Well, the FAIR plan right now is undercapitalized. So, that the FAIR plan was always considered the insurance company of last resorts. But now the FAIR plan is the go-to for, for most people. I in the room, I know a lot of mortgage brokers and a lot of real estate people in the room. And, the conversations are that their clients can't get insurance, or their clients, if they can get insurance, the insurance is unaffordable. So it puts them in it puts them, in a position where, they may not be able to close the refinance or may not be able to close, the purchase. So, with any other, or with what's going on, there has been things that have happened over the last year with the CDI. California, in September of last year, Governor Newsom basically declared a state of emergency in the world of insurance, and he issued an executive order saying that, hey, that this needs to be corrected. The erosion and the instability, in the market needs to change. You talk about, 103, just like the voters, passed that legislation back in 1988, we need to be able to do the same thing today. That to me, I believe is, if we, it is something that could fix what's going on is by changing the legislation. Prop 103, you've got, like you said, interveners. The process is a slow-moving process, and the insurance companies are like, dogs chasing their tails a lot of times. It's like, when they file for these rates, insurance is one of the heaviest regulated industries in the country, and specifically here in California. Insurance companies just can't, raise rate, willy-nilly when they feel like it. It's got to make actuarially sense. And, when they apply for these rates, it takes, the regulators anywhere between, 8 months to a year to come back with either yes, no, or either, we need to, adjust it. By that time, with all the things going on in the economy, you've got, 3,000 homes that are, people under evacuation in, in Orange County with the Black Fire, with the fire in Orange County, the airport fire, And so, it's insurance, the economy is very cyclical and or fluid, and insurance needs to be responsive to that. We don't always need to be, behind, So as things change, the insurance landscape or the insurance companies need to be able to, file the proper rate increases and get those rate petitions heard immediately and not with any delay. I think that is the real issue. But there are things that the CDI are doing, and hopefully it will allow, or hopefully carriers will in California will be interested in coming back into the market. Right now, there's not a whole lot of choices, and because there's not a whole lot of choices, the consumers are suffering for that in the form of higher prices.
I just want to interject. What he just said, 6 to 12 months, that's the best case scenario. That's not desirable. You need between 30 to 90 days. That's the best case scenario that I've seen the last so many years. You need to cut that down time significantly.
And these challenges aren't necessarily specific to California, but I think there is a somewhat of a picture being painted about our region that the increased cost of insurance, of property, all these things, crime, homelessness, impact our ability to be attractive to businesses. What do you, Nancy? What do you think we can do to, one, change that image, not just from what people view it, but actually change what's happening to make sure we make a difference?
Clearly, I'm not the insurance person on this panel. What can we do to change that image? We just had our State of the Valley event last week with the Valley Council members, and with the Olympics coming and the 6 mega events, the NBC All-Stars, we have the World Cup, we have the Super Bowl, we have the Olympics, the Paralympics, so 5 super events coming, some of them held in the San Fernando Valley. We were talking about this, and one of the council members actually said, and I agree with this, that Los Angeles has lost its luster, and we need to find it again. And he was talking about during the '84 Olympics, how people would say, "Oh, you're from Los Angeles." He'd be with his friends, and they'd say, "You're like a rock star. You're like a celebrity because you're from Los Angeles." And I'm a born and raised Angelino, and I'm a little ashamed. I'm embarrassed. So what can we do? We shouldn't have to be cleaning up our town, our city, our county just because we have these mega events coming and people coming from all over the world. There needs to be some pride in the community. But right now, there's too many issues, whether it's at City Hall, the Board of Supervisors, where we're focusing, and we have to focus on homelessness. It's definitely an issue. But what about all the other things? We keep cutting back, which hurts our infrastructure. In the meantime, we have record traffic. I know Drew drove farther than me. I left super early, and it still took me over 2 hours to get here when it told me it was only going to take an hour and 20 minutes. I mean, that's just not acceptable. How do people go to work, if they have to commute? I was talking to my girlfriend yesterday in Texas. She's 7 minutes from her office to her house. So what can we do? We need to have those open conversations, but I feel, this is me, and maybe you agree with this, and I'll see if Tracy agrees with me on this. We do a lot of talking to legislators who give us lip service. And it seems like they want to help, but their hands are tied because you have this one person who truly wants to help, and then you might have a city council of 15 people or whatever it is in whatever city you're in, and they all don't really feel that way. They just want to do whatever they're going to say so they can get votes. And so I don't really know what that answer is, but again, you vote in November. We put these people in those seats, and how are we going to clean it up? How are we going to fix our community and make it more attractive? And also, that's one thing, right? Is who's in those seats? Where do we play at the table? So my girlfriend runs a chamber in Eugene, Oregon. They have record homelessness too. She had this brilliant idea. Let's get everyone at the table, all these different agencies, and let's move in the same direction. Well, at the end of the year, I asked her how it went. Every one of those agencies, they wanted to move in the same direction, but their funding, they weren't going to get their funding if they continued to move in that same direction because their funding was based on services they provided. And I thought that was so interesting. They couldn't move the needle the way they wanted to because every one of these agencies was afraid of losing their funding. And so when we talk about what we're doing here for homelessness, is that part of our problem too? I've never explored that. But then you think of homelessness, and look at the Sepulveda Basin. There's fires all the time in the Sepulveda Basin. That's a risk to all those businesses around it. So everything that happens that's on the streets with our infrastructure, with homelessness, with crime, that Rachel Michelin's done such a great job with all of our retail theft and the bills that are coming out, things that have been signed, that's just part of this big well that we're trying to fill, right? We need to be able to, and all those affect this insurance industry, because once our costs go up on all these other things, when is it so expensive that someone moves to another state?
Just to add to what Nancy's saying, of course, everyone, tries to be conscientious of, what they're going to pass along, overstepping boundaries when it comes to speaking with your clients or, in our case, a tenant or tenants. But, there's times when it is appropriate to really go out there and share information. Basically, you can pass along to our tenants or your clients how to address certain issues and advocate to your clients, why they should go ahead and consider voting a certain way. And, for instance, this was helpful during Prop 15 when we had the split roll tax, and BOMA GLA provided us information as building owners and managers that we could go ahead and pass along to our tenants. And that way it could share with them how it would directly affect them. I think a lot of times people will take in consideration, once they start to learn, wow, this is going to affect me this way as a tenant, and how split roll tax would affect them and the pass-throughs that would happen and the operating expenses that would go up. It was beneficial. And basically providing that information from the associations that we're part of. It could be coming from them. So at times it's not necessarily like you're the one telling them how to vote, but it would then recommend on how to vote for certain bonds, propositions, even candidates.
I'm going to follow that up because I think it's our organization's different jobs to inform you. But I know that I send out things saying, hey, write a letter, and you don't have time to write a letter. Who's got time, right? Here's the email. So there's a lot of organizations, BizFed does it, we do it. We send out one of those one-click letters. We try to mobilize the people, right? We try to mobilize people because legislators need to hear from their constituents, not just these organizations. So when you get that one-click letter, you see a BizFed email, it says click here, it sends that letter for you. All you have to do is put in your address, and that email will go to your legislator. Don't ignore it. We need that mobilization. I know during the pandemic, I did one. I did partner with a bunch of chambers. We had 8,000 people use our one-click letter in one day because it meant something to them. So if an issue comes across and it means something to you, and you get a BizFed email because you're all BizFed members, or you get something from your organization, send that letter. It takes a second. It is literally a second because Althea's right. We need to educate people. That's the one part. But the next step is, what do you need to do? We could educate you all we want, but if you're not helping move that needle for us, we all need to move together. Rising tides lift all boats.
So real quick, kind of on that same space, and Althea, I'll kind of go to you because, it comes back to this issue of education. The LA County Board of Supervisors recently kind of directed its staff to put forth a new policy to protect certain businesses that have been around for 50, 60 years from getting increased costs passed on to them. I think the sense is that, either developers or business or property owners are just increasing costs willy-nilly. What does that model look like? How does that work when your costs go up for insurance, for property taxes, for electricity, and how do those get passed on to your tenants?
Right, so I think it's kind of going along with what was recently passed, and it was the Senate Bill 1103, and then the County Board of Supervisors, I think, are building on this. It came up before it got passed recently, which is it's a commercial lease mandates bill. And so it's looking to basically kind of control the operating expenses that you can pass on to certain tenants, or when you're not able to do an estimated, you have to look at the actual, and that could pose a big issue as far as we try to estimate based on the previous year for the current year, so tenants can get monthly bill and not be hit with one large bill at the end of the year where it's the actual cost. So you might start looking at, unfortunately, what kind of tenants also you're going to be leasing to, because you want to make sure that they have that financial background. Smaller businesses could potentially, you might be more concerned about leasing to them. They would basically, maybe you have no other option then to go ahead and increase the base rents, because if you're not able to do operating expense pass-throughs, then the base rents will have to cover for that. So those are some of the things that as a building owner and manager, you're going to have to start considering how those lease structures are going to be and how they could potentially change.
Can I just add on to this? Be careful what you do and what you ask for. If you pass on the cost to landlords, or you pass on the cost to tenants, this is what is going to happen. You pass on the cost to tenants, they're going to pass it on to consumers. You pass it on to landlords, they're going to pass it on back to the tenant. And either way, the consumer, you and I, and all of us are going to get affected. So we create the problem, and then we look at solutions. So, and what I said earlier was the stakeholders need to get together is be careful. You got to look right down the road and look at other collateral effects that can happen when you just talk about insurance. And I mentioned the lending industry, where we've got so many commercial properties coming up next year, and what's going to happen because these costs are going up. So just remember, fair plan applies to commercial properties too, but it doesn't give them full coverage. Now, where does that landlord go, or the property owner go? Yes, they'll try to get other coverages, additional insurances, so they've got business liability, they've got property casualty, and then they've got cyber. And when you talk about the insurances, there's a whole big chunk of money going out for insurances. So when you just keep adding it on, it's all going to keep getting passed on, or you will not have the right tenants who have the ability to pay, and that cuts out the mom and pop kind of tenants and business owners. So in the end, you become a death knell to small businesses. So you have to look at this in its, at a global approach before you start creating something to solve one problem and you just generated multiple other ones.
Because you said cyber insurance, and no one ever talks about that. And that is something that businesses need. I say this as an organization who got a spoofed email and we paid a fake vendor $30,000. And we hired an attorney that does cyber insurance, and the cost for that attorney was not worth us what it would take to collect it, even though we did all of our homework with the FBI, because we didn't have cyber insurance. And you talk about all these things that cost money. This is happening every single day to not just organizations and nonprofits, although I think we're the biggest target sometimes because so many different people are getting those emails versus one dedicated person. But talk to these guys about that, because I warned a bunch of people about it. My girlfriend ended up getting cyber insurance at her business, and she got hit, and it protected her and covered her. But I had to pay another $30,000 to my real vendor.
So kind of, I think one of the things I really like, that Bob said is kind of, hey, this is an issue that's going to be coming up next year as so many businesses are coming for, reinsurance. But I'm kind of curious, what do you see as some of those issues that kind of could be coming down the line from a taxes from insurance perspective, even from property taxes, should Prop 13 get changed as to the type of impact that it could have on the business community in California?
My answer to Prop 13 is no, don't go there. Do not touch Prop 13. You touch Prop 13, and it's going to open up a whole host of issues. And I'll tell you, she mentioned here split roll. So split roll is you deal with commercial properties different. Guess what? It's going to get passed down to the tenants. You reassess the properties. And here's the biggest problem, because I spoke to Assessor Jeffrey Prang on this directly, and there was no answer. How do you assess the value of a commercial property when the leases keep changing constantly? For those of you who don't know, the valuation of a commercial property by appraisers is typically done by taking the net operating income, which is based on the leases. Remember, when you buy investment property, you're not buying the property, you're buying the leases, which produces money. And then you discount that, you capitalize it, and that's how you arrive at value. But it's not a static number. It's a dynamic number. It keeps changing based on your leases. So how do you assess? That's one issue, which means the State Board of Equalization and the Appeals Board is going to get flooded with appeals. And then those of you remember Assessor Nogues, and I don't want to go there, and then you remember what happened at that time. So be careful when you touch Prop 13. There are allied issues, and you need stability. For any business to operate, I need to know down the line, what are my costs going to be? If I can't predict my costs, or I leave it in the hands of people and the costs keep varying, how do you expect me to run my business? And I consider myself to be a little more sophisticated, but a mom and pop who wants to come in, you've just cut their feet. So
that's, as a building owner and manager, we want to keep those operating costs low for our tenants, because what we get hit with, unfortunately, yes, it does get passed along to them, and it's the small businesses that hurt the most, and then the consumer. And just like Bob was saying about stability, you want to be able to tell, as you're doing a lease, to say, okay, the operating expenses will go up about this much each year. People can plan for it accordingly, and then you can move forward. But when you have these concerns that all of a sudden you can have huge increases because a building sells, Prop 13 were affected, then property taxes jump. It's going to be, yes, definitely a big problem.
So we do want to provide an opportunity for the audience members to ask questions. And so I guess we'll open it up to the audience if anybody has any questions they'd like to ask one of our panelists.
Yes, I'm Bill Rue, Governmental Affairs Director for the Citrus Valley Association of Realtors, and this is more of an observation, but something, Bob, you started to allude to. When we have residential property that's used for rental, the housing provider in many areas is limited to what they can raise on the rent because it's rent controlled. All of a sudden, you have fire insurance or insurance on that building that goes up 100%. You now have to take that cost because you can't pass that along to the tenant. In many jurisdictions, it's 1, 2, 3% rent increases, and that nowhere in any way, shape, or form covers the cost of that insurance.
So that is, now you mentioned just insurance. What about maintenance?
Right.
Have any of you called a plumber and asked him to fix a small little thing? Look at the costs, how they've gone up. Property owners, when you put rent control, and then you say you can't raise the rent, but the costs keep going up, it's an impossible situation. And then you wonder, why are new players coming into? Why aren't more properties coming out? So remember what I said earlier. We create the problem, and then we cite the problem itself we created as a standard that we have to follow. We ourselves are the people who have to solve. That's why all stakeholders need to get together. You can't operate in isolation, leave it to elected officials. You can't operate in isolation and leave it to, say, the unions or leave it to the homeowners. Basically, homeowners don't have a forum, but that's why real estate associations represent private property rights, and other agencies too. But it needs that every stakeholder needs to look at it in its entirety and not just as one item. And you know, we talked about businesses getting impacted next, and maybe that is something Kevin is going to consider as something, you know, from BizFed's side, because this is a massive problem that's going to happen next year. But getting back to what you said, this is an issue. I own rental properties, and I know a lot of people who own this. This is a problem where the margins on returns are coming down. And I just want to mention something on margins on return. To those of you who own commercial properties, and you've got a mortgage on commercial properties, you know, your lender carries out what is called a stress test. He's going to check on your financials that you submit, what is the return that is coming, and if it starts to go down, he's probably going to subordinate or subrogate some of the leases, and that ties your hand in handling the leases. So you start getting unintended consequences multiplying at a fast rate, all because we created that environment to make it difficult to operate.
Next question?
Yes, good morning. My name is Robert Sacedo. I'm president and CEO of Community Build. I want to share a concern and then a couple of potential solutions. We have a permanent supportive housing development, the first Triple H to come online in 2020. And when I spoke to our partner in that development, the only way they were able to break even was to dip into reserves because of insurance cost. And when you look at like revisiting lease costs, et cetera, our leases are below market based on the funding that we have, so we don't have the ability to raise rents to offset these expenses. That's number one. So one of the things that I've been giving some thought to in terms of how we solve for insurance companies that are exiting the state, California initiated the COIN program in the 90s, the California Organized Investment Network, which was originally for infill development. And I think we need to rethink how that money gets used. For those of you who are not familiar with COIN, COIN was the response from the insurance industry to not have to meet CRA requirements like banks do for reinvestment in low-mod communities. And there's billions of dollars that have come through. But if we were to rethink how we utilize those dollars to help offset some of these concerns, that's one solution. And the second thing we solve for is when companies want to exit California, we should push for immediate legislation that, call it a fee, a tax, or whatever, where they have to put money into a COIN-related program to leave California, because they've had the benefit of our business for decades, and now that it feels a little, hurts a bit like all of us, they need to pay a price for that based on the way I see it. Thank you.
Any reaction from any of the panelists?
Can I comment on that? We were a free market. That means you have the right to live and choose where you work, the right to pick up any insurance. When you start putting restrictions on what you can and cannot do, and you disincentivize. As collecting money, that's a good suggestion. But putting restrictions that are more, I don't want to use the word socialist, but putting restrictions on entities only disincentivizes people from starting a business here. That's from personal experience and talking to a lot of business owners. We need to look at solutions where we don't make it mandatory to do something that is not desirable. And I'm not trying to put you down. Your idea is good, but we need to find another way to do it than to put a restriction that, hey, you can't operate here because of all our taxes and restrictions, but you can't even leave the state without paying us money. So now that's a solution that is.
I want to respond to that. I'm not advocating anything socialist.
I'm sorry, you can't get Mike.
Well, before you go on, I just want to say that LA County is not an origination city anymore. We've had massive exodus of people leaving, they keep businesses leaving, even though they keep headquarters here. But no one is considering moving here. And this is statistics, okay? So if you're going to penalize a business, just like you said, this is free enterprise, to leave the state, no one is ever going to be encouraged to come here if for some reason they outgrow the land they need or whatever it is to continue their operations.
Well, I hear the woe is me in that, right? But when I see businesses in my community impacted by larger corporations who were here, who didn't make the appropriate investments when they were here, that's socialism. And so what I'm saying is that we have mechanisms in place. The reason the California Investment Network was in place, when an insurance company is fined for acting badly in the marketplace, those dollars go into coin. And what I'm saying is let's redirect it. And since they want to leave because it's painful, leave. But
Well,
you
isn't
need
that-
to pay
okay,
an
go on.
exit fee to leave because you had the benefit of our business all of these years.
All right,
Isn't
we
that
do-
though why we have this legislation that we're talking about? That's what we're saying. Why are we penalizing the business? Why are we not electing the right people, put the right butts in the right seats on the bus at the right time?
No, we do have other people who want to have some questions, so I do want one because we have about 5 minutes left. So we have one person here, then we have two over here. Or
All right, I'll be quick. Good morning, DeAndre Valencia, Monarch Solutions. And first and foremost, thank you to the panelists for being here today. This was very constructive and informative. My question is for Rick and Bob. I've heard a few solutions in regards to fixing this home/fire crisis. Some of it was dealing with dynamic modeling, getting a legislative fix on implementation of Prop 103, as well as bringing in global competitors. Since the commissioner is here, what are your top 3 solutions to fix this?
Well, I think number one, I think that the legislation needs to be changed immediately. I mean, you've got business owners that are suffering, because of the high insurance costs. You've got consumers that are suffering because of high insurance costs. I think that number one, it needs to be fixed immediately. Number two, I think that we need to look at different ideas on trying to attract more insurance companies to want to do business in this state. When you have 7 of the largest insurance carriers in California leave, we've got to figure out a way to bring them back. We've got to figure out a way to make insurance more competitive. I mean, when you have 1 or 2 carriers in the market that are selling insurance, then they dictate price. But when you have dozens or hundreds of insurance companies that are willing to play, then it creates free enterprise, like Bob said. So I think that there needs to be some sort of incentive or some sort of change to make it more attractive for insurance companies. Number one, to do business here. Number two, I think that the dynamic modeling is very critical in the insurance market. You've got a model that is antiquated today. You've got a model that it takes months, sometimes years to get the appropriate rate. I think that the insurance companies need to be able to rate the risk properly the first time. I think that because insurance companies are unable to do that, when they do get a chance, under these suppressed type of markets, then they raise rates 30, 40, 50%, and that is not an acceptable solution. I think that if the insurance companies were allowed to rate properly, and the regulators didn't slow the process down, I think that, insurance companies would be willing to do business here.
Or
Hi, I'm Tika O'Neill from the Greater Los Angeles Association, and just to piggyback on a couple of things, there's a domino effect that's affecting who is even investing or purchasing property in our areas. Because I know I'm a small property management company, and my mom and pop people are selling up because their insurance costs, all of their maintenance costs, everything has gone up 50% overall, 25 to 50%, just their trash collection fees alone. And they cannot, their retirement plan had just got totally blew up, okay? The other issue is with condominiums. Now you have HOAs that budget for a year and have to spread out those costs to all of those homeowners. And when condominium associations cannot get insurance or their insurance is doubled, that puts a load on everybody, and there's this trickle-down effect that is really affecting anyone wanting to buy anything in our marketplace, and it's scary. So we definitely need to get people at a table to sit down and try to find some solutions. Because right now, and if Prop 33 passes, forget it. It's over for a lot of us. I mean, I told people at our government affairs meeting yesterday, if Prop 33 passes, I may be moving out of state.
Thank you. So I have two kind of bomb questions, and you don't have to answer them. But the first one is, my understanding is we are one of the only states with an insurance commissioner that approves rate increases. And should that structure change? That's one question, and I know he's coming in here soon. But the second question is, as an elected official, there's several of us who are elected officials here. If I have 30 people yelling and screaming at me and threatening me in a council chambers, and only 2 of those are logical business people, how do you think I'm going to make a decision? And this is the problem that we have. The people who are extreme are the loudest, and that's who people are listening to. How do we get loud in an effective way so that we can really create change? And I loved what you said, Nancy. So it's food for thought.
So I want to answer that. So Prop 103, which makes the insurance commissioner, he has to approve before the rates go into effect. As a proposition and as the intention, it's good. It's the implementation that has caused all this problem. So when we become, when you start entertaining so many opinions, whether the interveners, as we call them, they represent the insurance industry who can't claim the cost of intervening, or when you represent the consumers and elected officials, the time taken to process this, we create another bureaucracy within the bureaucracy that is existing, and it takes so long to get a decision. So and here's the other thing, be careful when you ask for a legislative solution versus a regulatory solution. Regulatory solutions are easy to amend and easy to change and easy to adapt. Then to go to legislative, where you could tie down yourselves for years before it can, before any changes can take place. They need to be considered very, very carefully. I'm personally in favor of regulatory solutions, not legislative. So within the current framework, we can certainly get things done. And I just want to add something. We as stakeholders, we're going to play our part.
So sorry to interrupt, but we do have the insurance commissioners here. So I just want to say thank you to our panelists for a great discussion.
Hi, I'm Tracy Hernandez. I'm a founding CEO here at BizFed. Bobbin and weaving, I told the insurance commissioner he rocked my world so much that I literally drove down Topanga in Malibu when the earthquake hit, and my car bounced around on the road, so much so I thought someone rear-ended me, and I thought, whoa, the earth is shaking. Where's so much excitement about today? So I'm glad you all are here. We're going to shift into our keynote. We've got a dynamite-packed agenda today, so it's my honor and privilege to introduce my friend and welcome Ricardo Lara, California's 8th insurance commissioner. Isn't it interesting? He's only 8. We only had 8 insurance commissioners. But, Since elected. Thanks for correcting me, because I thought something's wrong with my notes or my math or what. But either way, Of course, he's a native Angelino. He's raised right here in East LA. I know Culver City isn't quite East LA, but adjacent. Previously served in the California community, our communities in the Assembly and the Senate, right here in the region. And now he leads the nation's largest state consumer protection agency. Now, in short, and I want you all to get this because, Ricardo, you got a big job. You're basically tasked with protecting Californians' futures. That's no small job. We think the governor is important, we think the speaker of the assembly is important, but no, the insurance commissioner has to protect our futures. So no easy task, complicated by accelerating and sometimes unpredictable climate changes that affect us all. And to be clear, no resident or business is untouched by these challenges. I know I'm preaching to the choir here. And the Commissioner Lara's efforts to implement, expedite, affordable, accessible solutions are key. And he does hold the keys to the castle in this regard, even though he's been doing a little duck and run and a little bit lately, but we know he's up for the challenge and going to work with the governor and everyone to get this fixed. His top priorities include helping Californians recover from natural disasters, adapt to climate change, and resist future impacts. Commissioner Lara leaned in with BizFed leaders. We appreciate it. He said, I only got 3 fires I'm fighting and this and this and that, laundry list in the parking lot, but yet he showed up for BizFed. So thank you so much. And the BizFed Institute, it does mean a lot. He is reliable and accountable and undeterred to handle our questions and hear from us frankly. This is a tricky audience for him to say yes to, and I do appreciate the guts you always bring. So together we have a better chance of addressing the exodus of insurance providers and holding the state accountable for protecting the nation's largest insurance market. The nation's largest insurance market. We now have to tackle the challenge of anticipating future catastrophes, and obviously it's a cornerstone of true economic resiliency, which we're here to talk about today. Commissioner Lara, the floor is yours. Come on up, give it to us straight. Please tell us, you're going to take about 10 minutes to talk about anything you want, but I would really love for you to tell us what we don't already know that's been reported in the media, where you have insights, intel, and you want us to know. And then we'll do some Q&A afterwards. Thank you.
Thank you, Tracy. It's great to be here. Good morning. Tracy, you said give it to you straight, but as a gay man, I'm going to give it to you non-straight. And so, and nonetheless, I'm going to give it to you. I wanna thank you, Tracy, for inviting me to be here. And please, I'm gonna speak about what we're doing and the current situation we're under. But I really want to have a really no-holds-barred dialogue about how insurance is really where we're at as a state, what we're looking at as a country when it comes to this global phenomenon, and what we're doing with our global counterparts, because this is really unprecedented what we're living through. And of course, I get elected insurance commissioner, and we have the largest insurance crisis in the history. So that just goes to the luck, right? I'm like, of course, this is happening when I'm insurance commissioner. But what this really gives us is really a unique opportunity to fix outdated regulations, to be creative in what new products we need to address a ever-changing market as we're focusing on climate change and how that's impacting all of us. And finally, people understand how important the role of the insurance commissioner is, because before nobody had any idea what we did or who we were. But honestly, we are in the midst of a global insurance crisis where the insurance markets are hardening, which means they are cutting back their portfolios and raising rates, because a couple things are happening. And yes, climate change is a big part of that, but we cannot forget about inflation and how everything is costing more, right? When you think about the cost to repair your auto, the cost to rebuild your home, the cost of materials, bringing those materials abroad, all that is impacting the cost of insurance. And when the prices of homes go up, the price of insurance goes up as well. What's happened in California, as Tracy rightfully said, we are the largest market in the country, 4th in the world. Now, when we start seeing these changes happening globally, they're going to start impacting California first. before they start going into the other smaller markets in the other states. And let me be very clear, because people tend to ask me about other states. Florida's insurance market needs to succeed for our market to succeed. Louisiana's market needs to succeed for ours to succeed. We're all in this together. And as you see certain electeds put states against each other, us as insurance commissioners, we're working together hand in hand, because we don't have the luxury of pointing fingers. We are the ones responsible for fixing our markets. And so we are working together with other states, and I'm very proud to lead the National Climate and Resiliency Task Force at the National Association of Insurance Commissioners, alongside with my colleague in Alaska, who have also seen record fires. Yes, in Alaska. And so this is something that is new to us. But let me tell you and talk about the California story. The first thing we started seeing changes in the market around 2017 as we were preparing for these massive fires. And we started to see insurance companies start cutting back their portfolios in certain communities and non-renew folks. And as we were looking at where this was happening, it was primarily focused in around 3% of our overall market. Now, you know, if you think about 3% of your overall market, but where it's happening, it's devastating these communities, because what's happening is a domino effect. If you lose your insurance, the price of your home goes down, you can't sell it, and then you can't recoup money and resources for the local community to actually fight the fires. So it becomes this horrible cycle that we're starting to see in these small communities. As the fires kept raging, now we were starting to see that non-renewals were going broader, because what we also have to do, and one of the other part of my job, is to make sure we have a solvent insurance market. So so the other thing would be, we don't want an insurance company to go under. That would be also be devastating for consumers, right? So you're constantly balancing consumer rights and making sure that the insurance companies have enough revenues to pay out 100% of their claims at any given moment. So that becomes harder as we're wrestling with unprecedented landslides, floods. Only 2% of Californians have flood insurance, by the way. That is something we have to fix. Now, and of course, these wildfires, tackled with the economic global challenges, no longer can insurance companies keep just writing and growing business in California. Before, because of the size of our market, they were able to still write off some of these losses and still continue to grow in California. No longer is that the case, because it's happening in Alaska, Colorado, it's happening in Idaho, New Mexico. These are just fires in the western part of our country. And so you started seeing the hardening of the market. So then I looked, and I used, as Tracy knows, I used my expertise of what should have been done a long time ago, is actually have a conversation with the insurance industry, which was frowned upon back in the day, an insurance commissioner talking to the industry. God forbid you talk to the industry that you're regulating. To me, it makes no sense. But we started having conversations of what they needed. And once we started seeing the numbers of losses, and I always say insurance companies are not churches, they're not charities or private business, and are not required by law, unlike utility companies, to turn on the lights. They, by law, can choose where they're gonna write. When we tried to force them to do that, the insurance commissioner at the time lost that case, and two, we've already seen examples of what happens, as the gentleman here was talking about, over-regulating or starting to write laws to mandate insurance companies. We tried that in the 80s after the Northridge earthquake. What happened? Insurance companies stopped writing earthquake insurance. They're like, we're out. So we were left with the California Earthquake Authority. In the southeast, insurance, those states at the time with flood started over-regulating flood insurance. What did the insurance companies do? Stop writing flood insurance. And now we're left with the National Flood Insurance Program that hasn't been updated for years. The coverage limits are horrible, and it's not modernized. So the first thing I said, what I don't want is government running an insurance company. That is the baseline. We are not gonna have government run an insurance company. So what do we do? What do we have in our power? We can bring down risk. we can work together with our consumers and our businesses to give them the tools to bring down the risk and get something for that, so that we're holding everybody accountable. So what we did is really embarked in a 2-year process where no other commissioner has been to all 58 counties, we've had over, I don't know how many town halls, we've talked to over 200,000 people, which now we're gonna add all y'all into that, because we needed to figure out what was really happening. And what we realized is, one, people are scared as hell. People are losing insurance, losing their homes to these fires, and don't understand what their rights are. And for many people, this is their only investment. And after you've seen grown adults coming to you and crying, not understanding what they just lived through, 2, then you have insurance companies trying to have them sign documents at that time. They're not ready to do that. They're just trying to figure out how they keep their kids, how do they help their children, where are they gonna live, do they have coverage to be able to go to a hotel? These are minor things that we were trying to work with them in the beginning. And then we started kind of piling all this data together. So we realized, 1, consumers don't know what their rights are, don't understand their policies, and it doesn't matter if you have 2 PhDs or if you just have a high school education. Nobody reads their policy. Nobody, including myself, right? The goal is you sign your insurance policy and you want to forget it and you hope it covers you. We cannot do that. We no longer have that privilege. And so we really have to understand what we're signing, what your rights are, and this is where the Department of Insurance comes to be your partner. We have people Monday through Friday that will read your policy, help you understand what your rights are, and I can't tell you blanket what your rights are, because all these policies are unique. And this is why we need people to help you understand what those are. One of the big issues that we're gonna try to work on next year is simplifying these contracts so that people understand what they're signing. Hey, how are you? I was like, and so what they're signing, which is something that's critical. I'm like, whoa, that's our city attorney. Yes, good. See, thank you. And so I'm gonna quiz you on that. So one of the critical things that we need to do is, how do we inform folks? 1, the insurance companies came to me and said, there's 2 things that we've been asking for in California for years. The use of technology to help us understand and futurecast where these disasters might go. Where are we most at risk? Previous insurance commissioners saying, absolutely not. We're not gonna let you use technology because you're gonna somehow use this technology to discriminate who gets insurance and who doesn't. We don't have that luxury. How are we California and not using technology to better inform where we're gonna be more at risk? And why cannot we use that same data to inform us if if Tracy's done all the hardening in her home right now, there is no way for the department to verify that. And so her rates don't even reflect the money she's invested in that property. So with technology, we're able to actually use that so that, 1, she's getting a policy that's appropriately priced to the mitigation that she's done. So that's important. The insurance company said, we need this help. Help us do that. So we said, okay, what else? Cost of reinsurance. Reinsurance is essentially what insurance companies buy to CYA, because I hold them to account to make sure that they have enough revenue to pay out 100% of their claims at any given moment. Well, the cost of reinsurance is tied to the global market, and they have to go to get reinsurance every year. And like I said, it's tied to the global market. Fires in Greece, fires in Portugal, earthquakes in Turkey, the bridge in Maryland, all that takes from the same pot of money for reinsurance. So every year, it gets drawn down. Every year becomes much more expensive. California doesn't allow for a percentage of that pass-through through its consumers. All the other states do. So other commissioners started coming to me and saying, hey, we're essentially subsidizing California because you are not allowing to get a pass-through so that we can actually we're all in this together. So I said, okay, fair enough. What do I get if we come up with some regulations? What do consumers get because this is gonna, again, we're only talking about, and I'm very clear about this, the availability of insurance so that we can get to affordability. We cannot get to affordability if insurance companies continue to retract and leave the state. That's just a matter of fact, right? So we embarked on this negotiation around what do consumers get? And we reached a landmark deal that we're gonna get done by the end of this year through our regulatory process without any legislation, without the legislature, and this is all through my own authority under Prop 103. So what does it involve? We're gonna do catastrophic modeling for the first time. We came up with the issue of reinsurance, and I talked to the reinsurers and said, look, I still don't want to get tied to the global market, but is our market large enough where in California we pay for our own risk? And can we come up with a formula that says, yeah, we take responsibility for California's risk. God knows we have a lot, but we still don't want to get tied to the global market. Can we figure this out? Absolutely. So now Californians are going to pay a little more for our own risk, not tie it to other states or other countries. And the reinsurer said, we can get that done. So what do consumers get? We now are gonna get a guarantee, and I can legally obligate them to do this, 85% of their business is gonna go back to the wildfire urban interface areas. And we've come up with a map that's on our website that details exactly what zip codes and what counties. We're using a hybrid approach because in some zip codes, there's a lot of homes that we can all bundle in. And in some of the more rural counties, the homes are so dispersed that we need to use county data. So that's another thing that we're able to get. And when we mapped it out, we actually said, the way we're gonna map this out is 15% penetration rate of the FAIR plan. If there's a zip code or a county that has 15% penetration, which means you're stuck in the insurer of last resort, you're gonna be a priority district. We mapped that out, and it actually mirrors all the fires that we've had since 2017. So now we have where the insurers are gonna come in, and they can only use those two tools that we're gonna give them if they commit to write in these communities, going back to helping our realtors sell homes, helping our firefighters with the resources they need. And we're gonna be able to track, because now we're gonna be able to actually get this data, because we were operating in a black box, because transparency is critical. So now we're gonna be able to inform our local governments to say, FYI, these insurance companies are now writing in your communities. These are the homes that are being taken out of the FAIR plan. We already have a list of those homes that we've prepared so that insurance companies cannot give me an excuse that they don't know which homes, and they're going after the ones that are already fully mitigated. Of course, they're gonna fight to get the homes that are least risky, that are stuck in the FAIR plan. So we're gonna get all these regulations that, oh, and by the way, since we're talking about, you were talking here, you were jogging my memory, the other thing I did is, let's look internally. Why is it taking a year or two for these rate files to get approved? It's ridiculous. So what is happening internally? When the law says in Prop 103 that it should take 60 days to review, and you have an additional 30 days if there's any negotiations that need to happen. So we realized when I asked my own staff, we're all operating under different data sets. We're literally still operating in binders. I was getting a binder for these rate files. I'm like, are you kidding me? Like, why am I still getting paper? So the legislature last year gave us a chunk of money to work on some data reconciliation tool that'll be electronic. So then the insurance companies, the department are working with the same data set to cut time. I now recommitted in our new regulation that we have to stick to the 60 days, because that gives market certainty to the insurance companies that they're not gonna wait a year. So this is what happens. If an insurance company puts in a rate file for a risk profile that existed maybe a year ago, so you put your rate file, it takes us a year. So what happens is you get this access here where the protection gap continues to grow, because that rate, when it gets approved, no longer actually meets the risk, because the risk has already changed. It's gotten greater, right? And so we're never gonna catch up to the amount of rate that you need for the appropriate risk. So we said, okay, we're gonna put ourselves on check as well. And so committing ourselves to doing the rate consolidation and going back to the 60-day, that is major. And that is one of the biggest things that, one, the reinsurers and the insurance companies ask me, can you give us some certainty? If we're gonna invest and grow in California, it can no longer take a year or two. The other thing, you were talking about interveners. California is the only state that has an intervener process. They very, very smartly embedded themselves in Prop 103. And so that means any intervener can come in and challenge the rate and say, we don't like this rate, and so we're gonna, on behalf of the community, we wanna now intervene, which also elongates the time. And what they were doing is really holding these rates hostage. And our department was just used to doing that because it's part of the process. And then when I read the proposition, it said, when you're an intervener, you're ready to intervene day one, not 5 months from now, not whenever you feel that you're ready to intervene. And so I got my legal team to quickly say, you're gonna intervene, you're ready to intervene day one, these are the days of the meetings, and that's it. Or else we're not gonna approve you as an intervener. We need massive intervener reform so that and the other thing they were doing, which was insane, is they were literally getting the work from my department, if our department had questions, and essentially copying and pasting it and saying, these are our issues as well. They can no longer do that. You're not going to intervene for the work that my department's already doing. And the Department of Insurance is actually the public's checks and balances, not the intervener groups that are making millions of dollars off this process. It is ridiculous. And when I started looking at how much they charge for intervening, and intervening is like whatever, intervening means different things to different people. They come and they'll come in and talk crap about our regulation and then bill us $100,000 or bill us $300,000. Where does that money come from? Then it goes from the insurance companies that then gets charged to the consumer. So we have to do massive intervener reform. That's also in plan for next year as we modernize our market. And so again, we are modernizing. This should have been done 30 years ago. And we are now trying to catch up, and we have committed to the governor, to the legislature, and to all the community folks that all these regulations are gonna get done by the end of the year. Meaning January 1, we'll be properly staffed. The insurance companies are gonna be able to come in, submit their rate files. We're gonna start getting those approved under the new requirements. And then we're gonna start seeing markets already, insurance companies moving back to the state. What has Allstate said already publicly? Once this gets approved, they're gonna grow in every part and every corner of California, because this is what they've been asking for. And Allstate's important because Allstate is the second largest insurance company in California. Farmers has already opened their HOA and their commercial policies again in California because of the market signals that we're sending. This is only the beginning. And so again, working with the industry, working with consumer groups that actually have members, that actually go out and talk to consumers, understand what consumers are going through. And some of these intervener groups don't even have members. It's like 5 people. They don't even go to the community. They don't do town halls. And somehow they're the experts? This is ridiculous. And so it's time to really be honest with ourselves about how we create these reforms. So we're literally right now, Tracy, as we're seeing these fires, we're building the plane as we're flying it. And as you can imagine, trying to get buy-in from a department of 1,400 people, it takes us a while. And so we are now, I saw you 5 minutes, and I'm wrapping up. And so, because I really want to get to your questions, but I really wanted to set the stage for, one, understanding the amount of work that we're trying to get done in 1 year, and the perspective that we have in the department now, where we're really trying to meet this moment. And that's how I got my wonderful team at the department, all of them, to say, this is our time, one, to understand, for people to understand the importance of our work, and it's our time to stand up and fight for the consumer and for the businesses that are struggling right now, and to finally modernize our market like nobody's ever done. So I appreciate your time and look forward to your questions.
Just what you came to get flashed right here today. Okay, 5 fast minutes. So you did an excellent job answering a lot of our questions that we had, and time and processing was super important. We're going to get as many questions in as we can, so now you're going to work with me on this. I'm going to, every one of you, when I call on you, you're going to be tight on your question. You're going to answer quickly so that I see about 6 hands. Here we go, lightning round. We're going to start with Bob.
So, Commissioner,
introduce yourself to the commissioner who you represent, and then your quick question.
Commissioner Bob Carlson, the president of Southland Regional Association of Realtors. You've been with us earlier. It's within your powers. A suggestion. You want people to read the policies. They won't read a 30-page document. All you need on the first page are the endorsement and exclusions of that policy right up front, even before they go to the deck page and down the line.
Yeah.
If you put it right up front, they'll know the gist of the policy.
Our goal is to bring it down to 3 pages, just that, and be able to have the links to all the legalese that's required. And so if you want to just click on that, you can click on it, but the goal is to bring it down to 3 pages, exactly what you're saying.
Okay, you guys are faking me out here. I said
we could just
okay,
go like that.
I have hands up, so now I see like 10. It was 7 or 8. So if we're going to work to get, okay, Rachel, where's Rachel? Our pen. Are we okay on a couple of minutes? Okay, so what we're going to do is everyone who has their hand up now is going to get their question in, okay? So let's work together and we'll end there. We're going to start here. We're going to end there. Here we go. Danita, introduce yourself.
Hi, Danita Willoughby, CEO of Big Energy Group, and I'm also on the Farmers Insurance Subsidiaries Board. So first of all, thank you. Your leadership style is one of listening and leading, so I appreciate that for all the time you took to go and hear what issues exist. So I just want to confirm what I think I heard will happen by the end of 2024.
Yes.
And that's 1, you'll be properly staffed. 2, you're looking to start, I guess, on the intervenor reform, which I agree definitely needs to take place. And then 3, commit to reviewing, approving, or declining the rate filings within 60 days.
Yes, so it gets a little more technical than that. So by the end of 2020, this year, we're going to have the new regulation on the catastrophic models. We're going to have the new regulation done on the California-only reinsurance. We've already done the regulation on the 60-day rate file and the complete rate file, because I forgot to say that insurance companies also committed to submitting a complete rate file, which is important. Before they would submit an incomplete one just to supposedly put their place in the system, which doesn't work that way. So again, holding the insurance companies accountable and holding us accountable. So that'll all be done. The intervenor reform, I've already kind of talked about what we're going to do. We're going to start that in 2025, but our legal team already does not allow them to hold rate files hostage anymore.
Tika.
Hi, Ricardo. Thanks so much for all the work that you're doing. I'm with the Greater Los Angeles Association of Realtors. Can you fix CEQA while you're at it? Just kidding. Just kidding. But is it time for us to really re-examine national catastrophe insurance?
There's a conversation around that. The problem is there's, even in our own country, in our state, enough revenue to be able to cover that. Now that we're looking at multiple catastrophes at the exact same time, it becomes very difficult, right? And how that would impact already our budgets. Because that's something, what we're looking at now with the federal government is actually, Congressman Thompson has a bill that we're supporting that would actually give consumers a $10,000 grant to harden the roofs, which is an important thing in terms of providing metal roofs. We're going to, in California, we'll bring this bill with you hopefully next year, we're going to create our own state program following Alabama, South Carolina, Oklahoma. This is where the South has really been leading with hurricane and floods. It will be the first state to have something specific like this for wildfire protection. And so everything's on the table as far as I'm concerned.
Gerard?
Gerard Wright, Government Affairs Director with the Greater LA Realtors. First-time homeowner, but I'm going to ask related to being a first-time homeowner. What's the conversations with FHA? Because that insurance impact first-time home buyers and getting the loan approved and everything going forward. So any conversations with FHA?
Absolutely. We're talking to FHA. We're talking to USDA. We're talking to EPA, all these different agencies have different grants. One of the things we want to do is actually do a data sharing agreement so that all these programs where they're coming in to harden different communities, that we're not operating on in a vacuum, that again, if we know USDA or FHA or all these other programs are already doing mitigation programs or discounts, that we're, one, either doubling down or that we use that data to show the insurance companies that the mitigation's happening, that that you should invest in these communities. So we actually just did that in DC a couple months ago, where we're gonna enter into a data sharing agreement, again, so that we're operating all together and we understand where they're working on the mitigation pieces throughout the state. So yes.
And we're always public-private partnerships at BizFed, so I'm going to go to Monica.
Hi, Monica Bank in LA County Supervisor Catherine Barker's office. Trying to make a super long story
My
short.
bestie.
Yeah. We have about 500 foster kids that will be out on the streets because they will not have insurance through their nonprofit insurance agency. They're required to have insurance through having a contract with the county. That's going to happen in the next 2 weeks. And we've been trying, I've been asking them to talk to you in specific, to try to talk with NIAC or whoever, because without the insurance, we have 1,600 foster youth that won't have a place to be in this year. And that's worrisome because we represent the most number of foster youth in our district. We have, hundreds of these places in our district, and they are so worried. They've been calling us since March. And we really could use your assistance and support in working with NIAC and working with these FFAs to try to get them insurance so we have foster youth that are in a safe home.
Okay, I'm going to connect you with Julia, oh, there she is, from my team.
Great.
Because this also came to the Pennsylvania Insurance Commissioner and the Georgia Insurance Commissioner just brought this to my attention last week. So we're going to put together a team to try to figure this out. Again, demonstrating that insurance touches absolutely everything. So we're on it.
That's good. Bill?
Bill and I used to work together back in the day.
No
Yeah.
way. Wow.
Commissioner, first, thank you for your leadership on this effort. Thank you, and Julia, for always taking a call that I have. But the question regards zip codes. When you start looking at fire zones and zip codes, will you take into consideration that some zip codes, I'm thinking Claremont, 91711, runs from canyons and foothills, very fire prone, down to the Claremont colleges and the I-10 corridor in an urban interface. So one rate could be set in that zip code, and yet it really doesn't make sense because a business near the I-10 is very different than a home up in the canyon.
Right. So the goal of the regulation too is to be fair, to pay for the amount of risk of where you live. So this is why now we'll be able to extract the data from that zip code, which we can't now. We'll be able to differentiate, somebody that's in the canyon or somebody that's by the colleges, right? So we don't have an opportunity to do that now, but the department will, through these new regs, will be able to look at that data to be able to differentiate and tell the insurance company, wait. This is very different areas, right? So this is why we need this technology as soon as possible. Of course.
What's the timing on those new regs to differentiate in a zip code?
All of it, all the regs, because as you can imagine, we're going from zero regs to fully implementable regs. This is why the governor, when we talked to the governor's emergency declaration on insurance, that was a nod to the Office of Administrative Law to say you can't take, when the commissioner sends you these regs, you cannot take a year to process these. It's all connected. We're all working on this. You have to do this in 40 days. And so not only are we working on emergency regs, but we're also going to submit the normal regs so that it all gets approved at the same time within those 40 days.
And Heidi will help you.
Yes.
All right, my fellow female in blue today.
I am Michelle Royal. I'm a commercial real estate broker in Leona Valley. I actually work out of Antelope Valley, but I have that exact same issue. I live in Leona Valley. My zip code is 93551. That is also Palmdale with all the tract homes. I live in a canyon home.
Right.
So I have experienced everything that we've talked about today. I have experienced every single one of them because we also do property management. My home burned down. I bought it in August of 2018. It burned down September of 2018. I didn't even get to move in. It was not a wildfire, but the house had been vacant for over a year. Houses don't like to be vacant. It decided to throw a fit. It did. Rebuilt it during COVID. That was fun. My insurance was $2,500 when I bought the home. When it was rebuilt, brand new home from the foundation up,
Up to code and
sprinklers,
everything,
everything. I had code upgrade issues. It was a nightmare, but we got it done. So I'm stronger for it. I have a brand new home with sprinklers, hardening, tile roof, the whole nine. My insurance is now over $8,000 a year. I am California Fair Plan with a farmer's wrap. That's insane.
Right.
If I can't get it down, I'm gonna have to sell my home
So
because I can't afford that.
Your home will be one of the first to get out of the fair plan once these regs go into place, because you are the classic case of a home that's been built up to code, that is fully mitigated, and the insurance companies are going to want to grab immediately after the new rate files get done in January, because by their agreement, not only are they going to commit to go into communities back like Lancaster, but simultaneously have to depopulate the fair plan. And so you are the perfect example of what's going to happen. Fingers crossed that's the goal. Is
I
that
will
homes
call
that give-
you.
Call me.
We'll have coffee.
Yes.
We're gonna talk about
Yes,
this.
we'll talk about it.
All right, right there, Blaine, there you go.
Hi, my name is Bonnie Rajai, North Point Bank. I also was not a victim, fortunately. My house didn't burn down. I'm right next to the Getty Fire, Santa Monica
Yeah.
Conservancy. So my question is, has the insurance commissioner to potentially bring insurance back into California considered? We have fire department boots on the ground inspecting homes in high fire zones. Have them make recommendations to people. Fortunately, I didn't have any cushions out. My house was all not hardscape, but you know, the plan. If people would have this education, if there was a collaboration to educate owners in high fire zones, we would have less incidents, they would have less loss, and I think it could be an excellent collaboration between fire and insurance.
So you're actually sitting next to the woman who's in charge of putting those town halls together. She's right in front of you. And so honestly, we will talk to anybody whenever. We will do this virtually. We will go to your neighborhood, whatever you feel comfortable with. We created 2 years ago the wildfire safety from wildfire regulations, which actually were the first in the nation regulations where, again, people are confused. They're like, I have to follow city law ordinance, I have to follow county, I have to follow fire-wise communities. There's federal regulations now. What do I do? I actually brought together all the state agencies that touch emergency management and the insurance industry. We came up with a simplified way. Well, these are the 5 things you do for your structure, the 5 things you do for your surrounding community, and for the first time ever, community-wide mitigation standards. Because the one thing that I kept hearing is, I've done absolutely everything in my property, but I'm abutting a national forest. Or this is my neighbor's second home that hasn't been here in months and the weeds have been growing. So now there's a standard that if you meet those, by law, by my regulation, the insurance company is required to give you a discount. So that is the first, fire-wise communities. So if you have, like, for your home, you have to call your insurance company and say, what is the fair plan gives the discounts as well, and say, what discount do I qualify for? By law now, they all have to give you a discount for that. So these are all little things that we talk to folks. The other thing too is if you're having a hard time getting insurance and you're using the same broker, the same agent, well, that broker or agent might be saturated in a certain community. So we'll connect you with somebody in Northern California. We'll connect you with somebody in San Diego who might have a little bit more space and be able to call some of the medium-sized companies or the smaller-sized companies that are not using our former governor as a spokesperson, right? So these are all techniques that we can help you. We will talk to 5 people. We'll talk to 500. Julia is definitely in charge of of putting that together. We've been doing that for 2 years. Yeah.
Okay, we have the final three questions.
We'll
Before I go, I'm coming to City Attorney Heidi Feldstein Soto, because she's gracious to come. She's patiently waiting her panel, but I know you have something of import to ask.
I do. Please include an enforcement provision. Please consider an implementing ordinance. Why? Because that will give city attorneys' offices, DA's offices all over the state the ability to bring an action under 17200, the ability to subpoena records from non-complying entities, and it will be a force multiplier
Okay, we gotta
for
talk.
your ability to enforce these regs.
Perfect. Let's have a convo. In that, many people don't know that we have over 300 law enforcement agents in the department, both investigators and agents that will go and actually investigate insurance fraud. Again, if you feel you're a subject of any type of insurance fraud, the devastation that I see about our seniors and having them lose their entire savings over a scheme, our small businesses closing because they bought a fraudulent workers' comp policy because they had no idea. All those things, we have agents that go out and investigate. Again, Julia could be the point of contact, or we can send you the information. We will dispatch agents. We've uncovered crazy fraud, not only in LA County, and we give the district attorneys millions of dollars to go after and prosecute these cases. And we actually, at the end of the year, see how many cases they actually take all the way to prosecute. And if they don't meet our quota, we actually reduce the amount of money we give them. So I know, I was like, why aren't we giving the city attorney some money?
Let's give her some money. She'll spend it wisely.
Let's
I
talk.
don't even want to ask about
like
the
that idea.
LADA's report card, but we'll get to that. Okay, here we go. Debbie.
Hi, good morning. I'm Debbie Corlin with LA South Chamber of Commerce. I actually have two questions. You sort of alluded to the first one about the fire mitigation efforts, and I think it's great. I'm hearing about people at their homes, but what about the rest of the areas like the cities, the counties, and all of that? It's kind of a longer-term plan to try to bring our rates down. For working with, I think it was Marietta tried to do it. Yeah. And I have one second question to ask you about, just a quick one. We have properties in South Los Angeles, rental properties. You know, we've done everything we can. We've lost State Farm, which is another, big one that you've known of, has gone out, getting rates at 5 times as much and going not into that, but to surplus lines. So when you look at it, it's more than just that. It's a lot of us now have to go into surplus lines. Right. And 500% more rates. So thinking about, and we're not in a fire zone. So those are my two things.
To answer the first question, this is why the community-wide mitigation standards are critical. Never before have communities come together and say, okay, and worked with us and the insurance company saying, what do we do as a community? Because we know that mitigating one house is not gonna make the difference. But if we all do this together, and so we've embarked in real mitigation standards for the entire community that the insurance company has agreed to say, you do this as a community, we're back writing in these communities. And so we got those done under the Safer from Wildfire Mitigation regulation, so we'll have Julia send you that. And the other thing too is, of course, we're partnering with everyone. This is why we gotta get these companies back into the state so that they can bring down the cost. And with the commitment that they've made that once we finish these regulations, that they will come back, 85% of those market are gonna come back into these wildfire distressed areas. That's eventually gonna bring down the cost for all of us because now they're gonna have more availability. So that is the goal. We're starting to see these market signals already impact some of the decisions. And when we've talked to the reinsurance companies, they actually said, look, we will double down on California, but it's gotta be priced accurately, and you gotta approve the rates in a normal fashion. You can't wait a year or two. And this is why we're getting to those exact things. And just with those issues, you're starting to see that they're starting to price it a little lower for California because they're seeing, first of all, they didn't believe me that I was gonna get all this stuff done. But now that we're already the last regulation we have to do is the reinsurance one. And then we submit the entire package to the Office of Administrative Law, and I've given myself the entire month of October as like if there's an audible, so I can give me that time. But we're on record of getting this done on time.
Okay, second to the last question.
How you doing? I have to switch the pendulum a little bit. I'm Michael Mason from community-based organization Gift International Foundation. We're a Department of Labor apprenticeship program in Class A trucking. Insurance literally shapes the commercial truck driving industry because there's no policies, or there hasn't been for me to find a policy that allows trucking companies to hire any drivers under 2 years of experience in truck driving. By me having to create my own network of small and medium trucking companies, it's difficult for me to launch to provide on-the-job training when I've literally been through 5 brokers and I can't find a policy that will be able to ensure my program trainers.
Yeah.
And so I'm asking you, do you have any suggestions?
You know what? This is new to me. I've been so focused on fires, but why don't we, Julia? Can we follow up? Let's follow up with you and see we can talk about what options we have. Thank you. I appreciate you for bringing that.
All right,
It's
grand
never a dull
finale
moment.
question. That's exciting.
Hi, I'm Albie Preciado. I'm a district manager with Farmers Insurance, and we're fortunate that we support 97 agencies from Palo Verdes all the way up through Bakersfield. So we're supporting a lot of clientele, and our agents every day would love to be in a position where we're not having to take rate because we hurt for our clients. The problem that we face is explaining to them why rates keep increasing is really we don't insure value, we insure reconstruction. And because, even when we were hovering about 8% in inflation, insurance was filling 37 to 40%. Is there anything you can do through partnerships, work, to help bring down the cost of labor and materials? Because that's what's hurting us. I know it's a big ask, but what is happening? Because we're seeing people where...
Inflation is really impacting all of this, as I said earlier, right? So you can't ignore that the economic indicators also affect insurance. But I'm going to tell you what you and your agents can do for us is really help empower the messaging around the reforms that we're doing, because that's critical. Our agents are not only the community leaders, but they're the trusted source when it comes to the insurance crisis of what's going on. And an informed agent that isn't just going to say, oh, it's because of wildfire, or it's because the department hasn't approved rates and it's chaotic. So we've been really working with the Independent Brokers Association, constantly doing town halls to inform our agents of what the changes that we're making, because we're in this together, right? And we want to make sure that you continue to sell, that you continue to provide insurance, and you're also covering the risk, right? And as risk goes up, prices are going to go up. But again, this is just a situation we're in right now. It's a hardened market globally, and with time and with these changes, it's going to go down. And so if you would want us to go and talk to your group of agents, to your set folks, I know Raul really well, and we're working a lot together to really work on with our agents so the agents know how to message this, so they understand what we're doing, because we're on this together. So again, would love to connect with you. Our agents are critical, just like our real estate agents. I mean, these are community leaders that are trusted. And so we've been working actually with the California Realtors Association to actually have these one-on-one conversations, because again, the consumers are going to go to their agent, they're going to go to their broker, and they're going to go to their realtor. And so empowering them with this information is critical, and that's what we keep working on doing.
Thank you for empowering us with information today. Thanks for taking the suite of questions. Thanks for all of you jumping in. We appreciate you, we respect you, and we'll continue to work together.
Thank you.
Have a great day. All right, so sit tight because we're heading into our next panel, panel number 2. So we go from one power broker to another power broker, Rachel Michelin. If you haven't yet met our moderator of our second panel, you're in for a doozy of a day. Rachel is the president of the California Retailers Association. So we've been talking about those highly impacted stakeholders in our economy dealing with pressing issues. All of our retailers, large and small, on our main streets, in our malls, everywhere, are on the front line of providing us goods and services we need, employing people in our communities, and being a part of the whole supply chain ecosystem. And Rachel runs the whole deal. So she is the most significant voice representing the retail industry in all of California. So we're privileged that she flew down today from Sacramento just to be with us. So she's tackling the really tough policy work at the state capitol with all of our legislators, with our regulators, with the governor. Literally, she personally has a seat at all these tables in all the rooms because she is creative, tactical, wise, a communicator. She's so accessible to everyone. I don't know how she does it in time. She talks, she's on every media, quoted all the time, and she's on the BizFed Executive Committee and leans in to support BizFed Institute. So Rachel is going to come up and lead our next panel. I'm going to let Rachel introduce the panel, and we're going to dig into it. And thank you for your patience, everyone, but get ready for this panel, too. Rachel's going to rock it. Thanks.
Well, great. Well, thank you. Thank you for having me. Let me get my situated here, get my glasses on. I'm thrilled to be down here. So, talking about a great subject, minimum wage and retail theft. And it's actually a great day to talk about retail theft because the governor just signed our last bill in our 11 bill package on retail theft. So today he signed our smash and grab bill, which I know my friend Mr. Zabur will talk about because he was actually very instrumental in making that happen. But I'm very thrilled that he signed that bill. So it's been quite a journey. But I have the privilege of introducing our panelists. So first up, I would love to have Mr. Karim Webb. Come on down. And would love to have Ms. Heidi Feldstein-Soto. Feldstein, sorry about that. And you know what? Erica on my team made me practice. And then Drew Mercy, my old friend. Where's Drew? There he is. And then I'm going to take one little point of privilege to introduce Mr. Zabur, Assemblymember Zabur, who's from down here. He and I had met via phone call, I think about 10 months ago. Little did we know we would be spending so much time together, but this man was instrumental in chairing the Select Committee on Retail Theft. His leadership really led to the most significant retail theft package that we've seen in modern history in California. And so I personally want to thank you for all of the work that you did. I really appreciate that. So with that, I'm going to start with you to have you sit down and share maybe 2 minutes about your background and some of the things that you'd like to address as we start our panel today.
Sure. Good afternoon, everybody. Good afternoon, everybody. My name is Kareem Webb. I am an entrepreneurial activist. I'm honored to serve our mayor in the city as president of the Board of Airport Commissioners at LAX. I'm also a Buffalo Wild Wings franchisee, and myself, and so we have 4 units and building one other in Southern California, the LA region, and own a construction company where we build schools, modular manufacturing out of the Inland Empire called Silver Creek. Happy to be here today to give a perspective as a retailer, as also somebody that is one of the people responsible for $40 billion of capital improvement at one of our cities and nations' really biggest platform for creating opportunity on behalf of a city and its citizenry, and certainly have a perspective around our young people and what incentivizes them to behave in ways that aren't in any of our interests or ultimately their own. And excited about sharing a word today and a stage with my distinguished peers, including our great city attorney.
Great, well thank you, and great introduction.
Thank you. Thanks, Kareem. It's a pleasure to be here with everybody. I'll be brief. I'm your elected Los Angeles city attorney. And I am the first woman to hold the post. It only took us 43 city attorneys before me to get it right. I'm also the first Latina elected to citywide office. That's all identity politics. What I really am is somebody who wants to do this job. I have no political ambitions beyond this job. I tend to call legal issues as I see them straight up the middle. That makes me popular in some quarters one day and unpopular the next day, and that's okay. It's doing my job. On retail theft, very briefly, we are focused on going upstream, trying to get to the fences, to the people who are profiting from the theft. We've been working closely with some of the larger retailers. A lot of the retail package makes many retail thefts felonies, which takes it outside my jurisdiction. I am, only responsible for the commission of misdemeanors by adults within the city limits of Los Angeles. So that's the only criminal jurisdiction I have. What I'm much more excited about are the tools that were included in the retail theft package that would allow me to bring injunctive relief and create buffer zones and stop repeat offenders from going into retail spaces. Thank you.
Drew.
Hi, everyone. I'm Drew Mercy. I'm the Executive Director for Antelope Valley Edge, which is the economic development organization for North LA County. We cover Lancaster and Palmdale and also southeast Kern County from Ridgecrest to Mojave, Rosamond, and Tehachapi. Additionally, in a volunteer capacity, I chair the City of Lancaster Criminal Justice Commission, where we've taken some very innovative steps over the last few years to combat retail theft and rising crime across the board. And I serve on the board of directors for the Antelope Valley Sheriff's Boosters, which is one of the largest police booster nonprofits in the country.
I'm Rick Chavez-Zabur. I am a newly elected assembly member, was elected in November of 2022, along with our great city attorney. I represent the district that starts in Los Feliz. It runs over the hill and picks up Universal City and Universal Studios. And then on the LA side, I have the Hollywood Hills, Hancock Park, Larchmont Village, Hollywood, West Hollywood, Beverly Hills, Westwood, and UCLA, West LA and Santa Monica, and some of the mid-Wilshire area. So that's my district. In the legislature, I also serve as the Democratic Caucus Chair, which is means that I chair the caucus, and the role that I serve is helping the speaker develop priorities for the caucus and actually manage our caucus in terms of how we engage as a caucus on priorities for the caucus. And then finally had the very honor and the privilege to chair the Select Committee on Retail Theft this year. Was able to work very, very closely with Rachel, and I just actually want to, get right back and say that that bill would not have happened if it wasn't for her. And the one thing that was missed in her introduction, in addition to the other things that Tracy said, is the fact that the reason why Rachel is so successful is because she's trusted. I know that we probably were on the phone sometimes every day, but at least a couple times a week. And one of the reasons why I think we were able to sort of get something done was because we were honest with each other. We were honest about where we couldn't go. We were honest about she was honest about what was needed. And when you bring honesty and authenticity to government, that's actually how you get things done. And so anyway, Rachel, thank you for you had the biggest role I can think of outside of the government itself in this, and together with the support of BizFed and the Chamber and the grocers and others. I mean, it was a group effort, but you actually had someone that was in those rooms that was really, really effective. So thank you, Rachel.
Well, Krim, let's start with you, because you're a business owner. So let's talk a little bit about on the front lines, retail theft. How's it affected you? How's it affected your business operations, your bottom line, your employees? Can you kind of paint the picture for us a little bit from your perspective?
Well, I'm a food retailer, so, my challenges are different than, folks who, are retailers in consumer packaged goods and some of the other challenges. Certainly, but as it relates to young people, especially young people coming out of the pandemic, I know upstream we've got, and the city attorney will be much better than me to tell us about what's happening with organized crime and kind of older people who are benefiting from the activity of younger people who are, the ones that we kind of see on the news menacing some of our small businesses. but young people generally, you know, I think as a citizen, as a leader, and as a business owner, I'm always focused on, you know, what would make somebody make that decision. And so, you know, and it's really about options. So, you know, hopeless people do hopeless things. And so, you know, as somebody who is an entry-level employer, I'm always focused from orientation throughout, you know, someone's entire experience working for me about, you know, pointing out to them that they have the ability to create whatever they want to create for themselves in their lives. I think, you know, we don't spend enough time really trying to digest what is the environment that these young people live in through no fault of their own, and these underloved, undercaring, under-resourced environments that lead to these negative predictive outcomes. So I come to my role as a leader, as an entrepreneur, as a business person, focused on trying to intervene, to provide the things that would have people make different choices, not just dealing with, you know, obviously on the criminal justice side and the folks that have a role to enforce our laws, which, you know, the mayor and others would say we have a responsibility to do that too. But as a leader and entrepreneur, I like to think of myself like on the preventative side, or on the side that helps somebody when they have at an inflection point to make a different decision, to give them some hope. Because young people generally want to do the right thing. They want to participate in society, and they want to see themselves, you know, like what they see on their phone, like they have access to that. And what they're born into would lead them to believe that that's not the case.
So let me build on that and ask you a question then. As you talk about focusing on the upstream, so, you know, when you talk about the upstream, we know that there are organized retail crime rings, and it's not even organized crime rings. We also know that there are, I would say, you know, the boosters that will prey upon. Do you see a lot of them preying upon young people because they know that they can go after these young people to go into stores and retailers to steal, and then they go ahead and then they you know, pay, here's a couple $100, go in and here's your list of things to steal. Is that what you're seeing, or what are you seeing happening on the ground?
Well, this is my cheat sheet of bills, okay?
Oh, okay.
And what would
look
help.
at that.
Yeah,
All
but
right.
I'm going to leave that
test
for
you. We're going to
assembly
test you to
yeah,
see.
No. You see it in all stripes and colors. I mean, what we've seen in the press lately is flying in folks from overseas, putting them down, renting an Airbnb or a party house for a weekend, going on a quote-unquote shopping spree, and then going back to their country of origin. And we have seen a fair amount of an increase in that kind of organized crime. Most of that is going to fall to the U.S. Attorney's Office because it crosses international lines. Much of the bill package strengthens the felony piece of the enforcement. That will fall to the DA. Okay, that doesn't fall to me. So in terms of what my office does, the hardest part we have in terms of retail theft is the smash and grabs, where you have youth, often masked youth, who do not, I mean, the criminal justice system just isn't well equipped for that kind of a run, and that's part of the reason why I said we're trying to go upstream. The online bill that was passed in Sacramento is extraordinarily helpful because that helps us, hello, Assembly Member Joan Sawyer, nice to see you. That helps us go upstream. That helps us go to where the money is being made and hold those who profit from retail crime accountable. The kids on the ground, they're not making a whole bunch of money here, okay? They're not, it's the same thing that we have with cannabis locations. Arresting the 18-year-old employee behind the counter is not the most effective way to shut down illegal cannabis operations, and so we have to get at the root cause. My office has cut the rejection rate for referrals from criminal justice in half. That doesn't mean that we always criminally prosecute. Depending on the offender, depending on their age, we use it sometimes as an opportunity to re-educate. We use it sometimes as an opportunity to divert. We have a neighborhood justice program that we're very active in. I would like to encourage everyone in the room, especially younger folks, and especially folks of color, to please join my neighborhood justice program, because it is a program of restorative justice, where we take young people who really can be salvageable and bring them up before a panel and design a program to educate and to make amends. Maybe the amends are to work in the retail store for a while. Maybe the amends are to take steps to clean up the front of the store. There's a number of things that we can do that put the individual in the shoes of the retailer and show the harm beyond taking, whatever goods they were sent in to take.
So Drew, let's talk a little bit about the Antelope Valley. We talked a little about LA. Are you seeing the same thing there, or what's going on in your neck of the woods?
It's a huge problem. I'm a former board member for the Boulevard Association, which is our downtown business owners association, mostly boutique retailers and restaurants. And it's a tremendous problem. We have a group chat, and I follow it, and every day there's problems. People stealing the tip jars at restaurants, going into the individual candy shops, grabbing stuff. And it's often youth, often the same youth over and over again. And I think the lack of resources to reach those youth and the lack of consequences for actions is exacerbating the problem. One of the issues, so the city of Lancaster, pre-COVID, so this was several years ago, did an analysis and found that half of our sheriff's deputy time was spent at big box stores dealing with retail theft. This was in 2019. It's only gotten worse. And our Lancaster and Palmdale are both the largest contract cities in LA County for the Sheriff's Department. They should be staffed each at approximately 220 deputies, and they're both about 70 deputies under that because of what the county did during COVID, restricting the deputy academies, and we just don't have the resources. And so one of the things that we've done in Lancaster is first in the nation created the hybrid law enforcement program. We've created the Lancaster Police Department, not to replace the Sheriff's Department, but to provide local funding, since the county won't, for proper law enforcement. And so that's just getting started up now. But I would say it's mostly hurting, certainly on our Boulevard Association, the mom and pops. They can't afford to buy the little plastic cages that you see in Walmart and Target to put items in and prevent theft. They can absorb those costs, mom and pops can't. And they feel their voices are not being heard.
So Assemblymember, two things he said that resonated were, the same people over and over again, which I think you've heard, and consequences, right? The consequence. So I think you heard that theme. And so can you talk a little bit about, as you were processing and looking at this retail theft package, some of the things that were in the package that address some of those things, and how really the thought process went into from all the different stakeholders and how the legislature tried to really address some of those concerns?
Yeah, I think when, the way I got involved in this is that I actually had both retailers and property owners and workers and people in my district coming to me saying this is a big problem. After I got elected, probably, I would say 3-4 months after the election, when I'd go to town halls and community meetings, the biggest issue that was raised wasn't the unhoused issue anymore. It was really retail theft. And so it was a marked change for me. I realized that I believed, because of information that folks gave me, that we were going to have retailers sort of shutting down in Hollywood within a year if we didn't do something, that there were areas where we had high amounts of shrink, that it was really going to result in those neighborhoods becoming blighted, and once you actually lost the retailer, it was going to be hard to have another retailer come in. And so I realized it was a serious problem. And there was a lot of debate about whether or not, what the statistics showed. The statistics showed that shoplifting was down compared to pre-pandemic levels in the state, but that commercial robbery and burglary were up, and it was different in different counties. And so we knew we didn't have good data. But the data that I focused on was, I think, what you're talking about, which is the fact that we actually had our retailers doing a lot of things like locking up things in cabinets. I knew that they did not have a self-profit motive in doing that. Locking things up means that they sell less of those products, and that they have consumer fear because it results in people walking into a store and looking around what's happened, and consumer inconvenience. And retailers did not have an incentive to lock up their cabinets. There was no benefit for them. So the clear thing that, when Speaker Rivas, and I want to give him props, he really, I was the one that went to him in the summer and I said, we really need to do something in my role as caucus chair. And he immediately picked this up. He said, we're going to make this a priority for the state assembly. We're going to create this committee. I'd like you to run it. And what he basically said is, I want a package of bills that is going to be effective in dealing with retail theft, but not rolling back criminal justice reforms that have resulted in putting people in prison for minor things when they actually should be getting help. And so those were the guiding principles. And when we talk about, prevention, the two things that are the most likely things that are going to prevent crime is the likelihood that that you have enforcement, that they're likely to get caught, and second, once they're caught, that there's some meaningful consequence. Not that there's, so the difference in going to jail or jail for 6 months versus going to prison for 5 years has very little difference in terms of prevention. And so our focus was really on the package of things that would prevent things. It focused, one, on the retail crime rings, the people that are going into the stores over and over and over again. So we actually had new crimes that related to that. It focused on how we give law enforcement more tools for apprehension, even at the misdemeanor level. For example, in my bill, the one that I have with the speaker, it allows for arrests based on videotaped evidence and sworn statements. That wasn't the case before. So, before, if you wanted to prosecute for a misdemeanor crime, you actually had to have the police at the store, pretty much, and they had to do the arrest and they had to witness it. Now that's not the case. We have more tools for local enforcement to do that. There's this issue of aggregation. One of the problems, and I think the city attorney has focused on it, is a lot of the resources are actually devoted at the DA level, and they only have the enforcement authority over the felonies. So when you actually have folks that are gaming the system and stealing just under $950, and these are not the people that are stealing crisis drive, these are these rings. They know exactly what they're doing, and so we really wanted to tackle this issue of aggregation, the ability of sort of aggregating more than one theft at a time and pulling them together so that we could actually prosecute them as felonies. So we have a number of things in the bill that allow that. My bill allows easier aggregation. It has the legal standard, doesn't make it so difficult to prove intent. There's another bill that allows aggregation for stealing across two jurisdictions. And then the other thing that's I think in the bill is it's focused, and I don't think we've done enough on this, and my colleague Mr. Jones Sawyer has been one of the leaders on this. We haven't been doing enough on diversion and rehabilitation. We have a little bit in the bill that does that, but we haven't actually really tackled that issue. And one of the things we all know is that for the folks that are not in the retail theft rings or the people that are actually being recruited in, one of the problems that people face is that when people are arrested, we don't have the resources to actually get them the treatment and the help that they need.
Yeah, sure.
Just to give some specifics, okay, and I really want to thank the Assembly for this package, but we're also taking steps to enforce. So in 2021, which is the full year before I took office, my office rejected the referrals for retail theft at a 40% rate. So 40% of what was sent over was a reject. My first full year in office, the rejection rate, which was 2023, the rejection rate was 23%. So we cut it down.
Why was that, though? Why, what's the difference?
Well, to some extent, we were much more willing to bring small, petty misdemeanors, particularly by adults, particularly in concert, particularly when coupled with conduct designed to terrorize, particularly with the flash mobs. I mean, we made it a priority to take the kind of activity that was terrifying neighborhoods and to, where we could, prosecute or at least file charges and divert against the individuals involved.
And that was your decision after you got elected.
You know, it was done in conjunction with my criminal branch. I don't take full credit
Yeah.
for anything.
Yeah.
I supervise
But
1,000 legal
yeah.
professionals. They bring ideas to me, and yes, I will support them as appropriate. But I give my criminal branch a lot of kudos. They made it a priority. This doesn't mean jail sentences. Again, remember what I do. But what it does provide is accountability. Criminal justice is hard. You have to prove things beyond a reasonable doubt, and people with masks and a smash and grab are not always identifiable beyond a reasonable doubt. So the other thing that we've used relatively effectively is civil tools. Okay, bringing this kind of injunction, and I want to really commend the Assembly, okay, because the ability to file something on behalf of the people of the state of California that would be an injunction to prevent a repeat offender from, you know, going near a buffer zone near retail space is a tool that we intend to use. To give you a sense of the number year to date this year, we have received 3,296 theft-related filing referrals from law enforcement. Now remember, that's misdemeanors in the city of LA. That's a lot.
So think about.
May I
Go
add
ahead.
something about that was said earlier? One of the issues particularly with the young people, does have to do with the criminal justice reform that there isn't a political desire to touch. We worked with the supervisor for LA County probation in our area, who recently retired, and one of the things he talked about was the fact that they're putting so many adults into what were meant to be the youth facilities. They've become the university for crime. And it's that lack of willingness to have a consequence to keep pushing them off and say, well, we're not going to hold you accountable, we're not going to hold you accountable. That really needs to be looked at very seriously, because that's a serious issue in the justice system.
So you talk about young people, though, too. When you talk about, let's talk a little bit about minimum wage, right? So we had in fast food, as an example, we had the rise of minimum wage. We have a ballot initiative. I think it's $20 minimum wage, right? I'm losing track of minimum 18. So, what as a business owner, where are you on the minimum wage? Is that impact? Do you think there should be more of a variance in minimum wage for younger people? Do you think there should be some give and take in the minimum wage? Where do you see that in terms of being able to get more young people engaged? Because some businesses are saying, I just saw an ad on social media, I think there's a campaign, maybe it's here in LA, that some small businesses are dying under the minimum wage. I'd love to hear your perspective.
It's a difficult issue. I mean, none of these issues are solvable, or really, can we have a conversation about them in a vacuum? Are you for or against minimum wage? Like saying, am I for or against people making enough money to be able to help their families, because one minimum wage job doesn't allow you to really live in our region. It doesn't do that. And in QSR or fast food or casual dining like Buffalo Wild Wings, young people aren't really working. I have a few young people that might be in college at Dominguez Hills, if I own one in Carson. We got a lot of full-time people attempting to leverage jobs that weren't intended for them to be able to take care of their family, taking care of their family. So it's a much bigger issue when I think generally, as we talk about the economy and the access to resources in order to fuel your business, fund your business, the shift to private equity from publicly traded companies, all of the things societally as it relates to the economy, where folks who aren't the producers are taking a bigger chunk of your P&L, is a conversation that we're not really having. And so when the business community and labor are, the business community's we have bank covenants, and we are, trying to fight to stay in business. It's easy to say, well, my labor is going to go up 2% or 2.5% because, and I'm going to have to take price, and my transaction counts are going to be decreased because I'm taking price. And all of these other issues that we are facing as small business people that are difficult. So we're fighting on all the margins wherever we can in order to protect our margins. But then you got to take a step back and say, wait a minute, what is upstream in terms of what's really causing these problems, and how do we find ways for labor and business to come together to talk about what kind of economy do we really want? What's in our young people's interest? What's in our long-term interest in terms of being a capitalistic democracy, which is really important, especially in our city right now, agreeing that that's what we are, and then going about collectively figuring out, okay, how do we get here how do we get to where we want to go together?
So, and we're going to open it up for Q&A. I would say this year, and I'm going to echo with Speaker Rivas, especially in his leadership style. Not only did we do something around retail theft, but we had a PAGA reform in California, which was huge, and we were privileged to be on the executive committee with the Restaurant Association and the Cal Chamber and Western Growers to negotiate PAGA reform, which was huge. I know restaurants are impacted a lot by PAGA lawsuits and providing a lot of relief on that front. But I will say one of the things that I appreciate about what happened both with retail theft and PAGA is a change in, I would say, on how things are happening under his leadership and the ability to have some of these conversations. And as I'm listening to your talk, I think a lot of it is having those difficult conversations and being willing to come to the table. And I know I will say that during retail theft, there were people I had to sit across the table from who 2 years ago I said, work with me now, we wouldn't be here. And I had to, swallow my pride and smile and let's make this happen, because it is about trying to move forward. And I think you're right. I think California is hitting that point where we need to have people willing to get to the table, labor being one of them. And I think they're starting in some instances to be willing to do that. We'll see. Maybe that it was just this year. Maybe I just had a good year. Maybe next year I'll have a different story. But let's see. Is there any questions? Great. I'm going to go here, and then I'll come over here. Oh, him?
Thank you. I'm Jim Tanner, owner of Tanner & Associates, real estate appraisal firm for 43 years. But I'm also a father and a grandfather of men of color. And my concern is, it's hard to create a balance, and I understand that. And I am very much pro law enforcement. However, I am also a person that has been the victim of some egregious things that my concern is the buffer zone. So if you have a child who's 17 years old or 19 years old or 21 years old that can't quite afford to eat while he's in college, and again, I don't want to be the bleeding heart. My concern is if that child happens to be influenced by a big fish upstream, and how many times, first off, I see a search and frisk, a stop and frisk coming if we're not careful with these buffer zones. I'm concerned about that. And my question to the city attorney is, how many times can a kid that steals $200 worth of sneakers out of a store somewhere, and I'm not soft on this, how many times does he get before that becomes a felony?
Let me put it to you this way. I think that prosecutorial discretion and the principles of restorative justice come into play. I can't give you a blanket answer, because every individual who comes into our system deserves to be treated as an individual, deserves to be treated with compassion where they're just off on the side, but also deserves consequences where they are cynical, where they are repeatedly going and hitting the same Target store. I mean, I have one individual who happens to be young, okay, not a minor, because then it wouldn't fall to me. Minors go to the DA's office. But a young adult who individually was responsible for repeated thefts at the same retail chain of over $60,000 in 1 year. Okay, full-time job was going out and stealing. I'm not going to treat that individual gently if it falls to me. One of the things is if the DA's office doesn't prosecute, my office is able to separately charge each theft. My office is able to ask for the maximum sentencing in each theft, and my office is able to run those sentences consecutively. That is an awesome power. That is not something my office exercises lightly, That is not something I'm going to exercise against a first-time offender or a kid who's stealing, a $200 pair of sneakers every now and then. But in the right circumstances, it is a tool in the law enforcement box that we needed. And for that, I'm grateful to the Assembly.
Okay. One added question to the gentleman that's from the Higher Education.
Excuse me, we don't have enough time for only one question per person because we only have a little bit for Q&A, so we want to make sure to circulate. Thank you.
Hi, I'm Eric L. Chan, most recently elected city councilman for the city of San Gabriel. And I have a general conceptual question. Now, regarding how lenient criminal laws in California affect property insurance claim costs and general business, because when criminals aren't afraid to commit smash and grab and home invasion robberies because Prop 47 allows them to steal $950 worth of property without facing any real legal consequences, would you admit that it's time to elect more hard, heavy, law and order conservative politicians in California and because the namby-pamby, touchy-feely liberal ones aren't getting the job done and they hurt business?
Who is that question for?
All of you.
No, I wouldn't agree with the characterization or the adjectives.
Well, I just want to stick talking to policy. I will say that I believe the pendulum has swung a little too far in terms of moving away from real consequences. I think that's something we need to get back to. Particularly one of the things we've talked about that's come up is that DA discretion. Well, in LA County, we have a DA that more often than not chooses not to prosecute. And that's a very big challenge. It's been a challenge in our area. It's why many, particularly mom and pops that are busy just running their business, they don't even call in the retail thefts anymore because they know that under the DA policies, they won't be prosecuted.
Well, and I also think one of the challenges is that we also have a lot of jurisdictions that are, the law enforcement departments are understaffed. I mean, a lot of times for retailers, they'll call and they'll wait. I had one with 3 hours for someone to show up, and that's why the probable cause that we changed was so important, that we're able to use video, and that's why it was so important to do that we'll be able to upload video directly to DAs to help them build these cases. And so for us, I think that that's why putting these policies in place were so important. I know Mr. John Sawyer is here, who kind of led the charge on the ORC task force and the ORC statute. I mean, we led the nation with the CHP and the task forces and the work that they do. There are so many things that we don't even see. I've seen it from the CHP of the things that they're doing and stopping in California. Instagram posts of smash and grabs that never happened because of the work that's being done across the state and the collaboration. And so, there is a lot of things being done. I see some folks, some elected officials, in fact, that post the same videos over and over and over again, trying to say that it's the same thing. And so we are just trying to be pragmatic and focus on the policy, on things that are really going to be impactful and really try to change the dynamic in the state of California.
Yeah, I was going to say, this is a very politicized issue, and I think you've got folks that are participating in the dialogue that have political goals that are not necessarily addressing the problem we have, which is actually in the retail theft case, reducing retail theft, preventing it, making sure that we're doing things effectively and spending the public's money wisely. We don't want to be motivated by emotional characterizations of what's happening in our communities that may not be accurate. So what we were trying to do is focus on what is really happening in our stores and what is going to be effective in stopping it. And as I said, whether someone has a potential jail term of 2 years or 3 years or 20 years, that doesn't have an impact. It's about whether it's enforced and whether there's a meaningful consequence. And that's what we tried to do, and whether we have diversion and rehabilitation programs to get to the root causes. And I think that's what we tried to do, and I think there were people from across the political spectrum that participated in this and with different political ideologies, and I think we did the best to try to solve the problem.
Rachel? Yeah, hi.
Good afternoon. My name is Arnie Corlin. I'm here actually with BizFed as representing the Los Angeles South Chamber of Commerce, and I also representing the Apartment Owners Association. So kind of a unique perspective, and my question is basically going to be all of the elected officials here who I have talked to in the past, and I hope you will consider again because I've asked to participate. Kareem, I appreciate what you said and what Drew is doing about upstream. You know, how do we identify these? So another perspective, besides being a rental property owner, I'm actually a former reserve officer with the Los Angeles Police Department. I was assigned to South Bureau Homicide, although I worked at hundreds of homicides, but thousands of other types of crimes. And the one simple nexus that I used to do it with thousands of other owners previously, I cannot get the cooperation of our elected officials. If you start to look at your calls for service, you look at those individuals who are involved in the criminal and nuisance behavior, 90%, because I tracked it, live in rental property. It's not that all the renters are bad, that's just where the most disenfranchised and least amount of opportunity is. So in the past, when I started to go to these locations where they lived, it's about home, I would find out that LAPD had been out there 20, 30, 40, 50 times to the same address. So all I would recommend those who are the elected officials do is get with LAPD, get with the other law enforcement agencies and say, hey, where are these calls for service goes? I need to get out there as the elected officials to figure out where the jobs are, the food banks are, the mental health resources, all the things after the first call for service. So that's all I'm asking of the elected officials. I get no cooperation anymore from our elected officials.
Arnie, since that seems directed at me, I'm going to go.
It wasn't just
Okay, because what I'm going to tell you is we have focused incredibly on our relationship with LAPD around the city. If you go to the 77th Street Station, I personally have gone to roll call at least 3 times a year, and I go to roll call because of what we've been doing on Figueroa Street. I took the idea that you gave me from campaigning of putting surveillance cameras up in an area that had become a crime magnet. We got funding from Councilmember Marquise Harris Dawson, and we put the cameras up on FIG, and we have made a tangible, palpable difference. On retail theft, we have just organized a task force, I think it was late last year, to focus on the Topanga Mall, because that was one of the malls that was undergoing the greatest pressure. So it's a big city. We have limited resources. The LAPD, as you know, is down 1,500 officers. And so what we are doing is we are doing multi-jurisdictional federal, state, county, and city task forces to address hotspots. And that's retail theft in Topanga. That's neighborhood courts all over the city. That's the sex trafficking of minors on the Figueroa Quarter. As difficult problems come to our attention, we do bring what resources we have to bear, and we address the problem.
I appreciate it, but that's not what I am saying is, if you work with the rental owners, we're in a unique position, and I used to train thousands of owners to look at pre-incident. That's what I'm talking about.
I understand there are due process concerns with that kind of, I don't want to use a pejorative term, but we have to be careful not to come across as a vigilante sort of justice that is targeting particular neighborhoods. And so I understand, and I'm happy to sit down with you and see good ways that we can work together, but it can't just be that an apartment owner calls in law enforcement and criminal justice, okay, in connection with a particular property.
Okay. Well, thank you. I think we have to, we could probably keep going on and on. But thank you so much. Thank you to our panelists. I know that we will continue this conversation. I think it will continue next year in the state capitol. I know that we're still committed to doing this, but thank you to all of the work that all of you are doing. And to all of you, I encourage you to continue to stay engaged. I know this is something that all of us care deeply about, and appreciate everyone's passion about this issue and being involved in your community. So thank you.
We're going to go ahead and introduce the Assembly member. To my left, my longtime friend and fraternity brother, Reggie Jones Sawyer. We were undergrads together, but Reggie represents the 57th District, includes Exposition Park, Skid Row, downtown Los Angeles, South LA, He was first elected to the legislature in 2012, earned a much-deserved reputation of being a progressive reformer and champion of second chances. The Assembly member has worked on reforming judicial, criminal justice, and police policies to ensure greater public safety and equal treatment under the law. His Peace Act, AB 89, transformed the recruiting process for law enforcement by raising the age limit to 21 with new college curriculum requirements for law enforcement cadets. In 2018, Assemblymember Jones Sawyer successfully authored AB 1065 to deal with the crime of organized retail theft and established the California Highway Patrol Organized Retail Task Force. So if you could give him a hand and welcome him. All right. So the first thing that I want to ask, in the last session that ended with a bit of fireworks, can you give us your thoughts on the 23-24 season and your final session in the legislature?
I'll try to be as brief and concise as possible, because I know it's the one thing that a politician learns is you don't want to get in between people and lunch. And so this past legislature, so when I came in 2012, there was 38 new members coming in, and there's 80 members in the Assembly. So we made up a significant number of going in, but there still were a lot of people that had much more experience than we did. At that time, 6 years was considered a lot. I am one of the first ones to do 12 years with the new system. There are only 8 of us left out of that 38. So the majority of the people that are there now are inexperienced, they're new to the system, and quite frankly, they don't have the kind of breadth of experience that you need to handle some of these problems. And so there was a lot of confusion going on at that time because they're new. I know we were the same way when we came in. And so fireworks were happening because people just didn't know how to react to some of the most consequential things that were going on at that time. And I think we made it through. I think it was a good learning. It's like learning under fire. Mm-hmm. Like in a football game, you got to learn under fire.
Yes.
I think they learned. The thing that you need to know, the new group coming in, 70%, 60 to 70% of them will have 4 years of experience in the Assembly or less. And so the experienced people, most of them have gone.
You know, when you look back over the last 12 years, what kind of progress do you think we've made?
So when I got elected in 2012 on my first floor speech, I told the members there, and especially my colleagues there, I said, look, there was a young man who started his civil rights career in 1958, and he was assassinated in 67. But in those 12 years, he did some of the most consequential things ever being done. And we need to think about what Martin Luther King did. We need to think about not just doing the day-to-day stuff, but doing things that are bigger and better than ever. And my mentors, Herb Wesson, and others, and Karen Bass, they informed me, and Willie Brown, they informed me, do not be what they call a backbencher. If you want to know what a backbencher is, it's someone that goes, you elect them, and then when they finish, you kind of go, what the fuck were they up there for? You ask them, what did they stand for? What did they do? And you look around, you say, you know what? I voted for somebody, and I can't tell you their values and what they stand for. And that is something that I did not want to happen. And that's why I started the Progressive Caucus. That's why I did the criminal justice stuff. That's why I changed the criminal justice system, because I wanted to leave something behind. Even being able to sit and be the godfather of cannabis. I did the laws to help create cannabis as a legal entity in this state. And so those are some of the proud things that I'm leaving behind, because those are things that are going to last long after I'm gone.
Thank you, Reggie. You know, today there seem to be a lot of Trojans in the house, USC Trojans. And, you know, I'm a UCLA Bruin.
Yeah.
Go Bruins.
Just remember, payback's a motherfucker. And this is our year, baby.
And past president of UCLA Black Alumni, and Reggie.
Past president of BLC alumni.
See, and Reggie and I work together. You know, it's interesting because we go back about 47 years. When I was pledging, Reggie was one of those big brothers that didn't haze you. And stand up, Jim Tanner. That's one of my line brothers right there. We pledged together. We go back 47 years. But my point is even back then, Reggie, his mentality was, you know, you don't have to beat somebody up to test their character. And I respected him then. He was over at SC, and normally the SC guys would really come over and give us a hard time. And you got to understand, this chapter, Tom Bradley came out of it, Mervyn Dimely came out of it, Arthur Ashe came out of it, Johnny Cochran came out of it, Cheryl Luke came out of it. I can keep going down the line. But I really respect the fact that he's taken a personal mission on this retail theft. And I know that, and I trust that his work is going to be noble. And so with that, I just wanted to say, you know, you were early in the conversation with the bill creating organized retail theft being signed into law in 2018. What's your perspective on how to deal with that issue?
So when Rachel Michelin tells you that she came early to talk to me about it, and that working with Governor Jerry Brown, we knew we had to come up with something. And we knew we had to come up with something that both not only punishes the people who are the ringleaders and making sure they're, not only they have consequences, but they have long-term consequences. But on the other side, we had off-ramps so that people would be able to get diversion programs. We went together and put together 1065, that bill, and we put it out there. And the only law enforcement group that took it to heart, I have to give credit to the Attorney General, Rob Bonta, and the California Highway Patrol, because they've been extremely successful at curtailing organized retail crime, arresting people, and giving back businesses their goods. And I mention that all the time because when you have law enforcement working together with the legal branch to be able to do this, you're able to curtail it in a significant amount. I like to tell people, because law enforcement refused to activate our law, 2 years later, then the new governor, Governor Gavin Newsom, put $200 million toward that program to incentivize law enforcement to do it. And I know LA County and San Francisco catch a lot of heat, but they are right now have prosecuted more people on organized retail crime because of the money that they've got than any other county, and there's 58. Let me say that again. To say that there's 4 out of 58 that are actually actively prosecuting it using my law is something that doesn't get out enough. And so when I saw all these new bills, I always tell them, that's fine, but always remember 1065, I am the godfather of organized retail theft here in California.
Let's give him a hand. Okay. So what do you think about the law enforcement advanced alternatives?
Look, I've been on public safety 11 of my 12 years. I was on public safety budget. I've worked with law enforcement, criminal justice folk, community leaders, a lot of different people on this subject. One of the things I realized early on is there's something called nudging, like you can nudge somebody into something. So if you, as we went out and started talking to law enforcement about why they didn't go ahead when a business, your business would call, and then law enforcement wouldn't show up. And then when you finally get them on the phone, they would say things like Prop 47 prevents me from arresting them. That is not true. They can arrest people for this. It's always been on the books. It still is on the books, and you can do it. It was on the books before my law, and on the books afterwards. I call it the blue flu. And the blue flu is very effective at hoodwinking you into thinking that they need to up the number of law enforcement and the number of laws, and that'd be more punitive than anything else. And so it is very important that we try to figure out what is really going on in the retail space. And I work together with a Republican sheriff, and we went and tried to do an audit or some kind of analysis with an independent group on what is the real source of retail theft. Is retail theft really ending businesses, especially brick and mortar here in California? What is it doing? Because when we ask businesses, can you give us our numbers? Can you break it out between organized retail theft, shrinkage, and just people walking in the store, and they couldn't tell us. Or we ask them, how many times did you call law enforcement, and they didn't come. Or we found out that law enforcement, if you as a business kept calling and calling here in LA, they then would say they would arrest you for being a nuisance and calling them. And that's why we had to do a bill. Part of that package, one of the things in the package, says that law enforcement can't arrest you for calling them about a theft in your store. Let me say that again. Law enforcement was going to arrest you for overcalling them about thefts in the store. And so we had to do a bill preventing them from doing that. And so we need to really sit down and try to bring more resources to it so that, as my counterpart said, who'll be there, Rick Zabur, as we start moving forward, as we start to look at how we're going to deal with people so they don't recidivate, because 50 to 60,000 people since I started are no longer in prison. 50 to 60,000 have not recidivated. The number of crime has gone down statistically, but I know fear is more powerful than anything else in the world. And I can tell you every day, and everyone can show you numbers, but if you are afraid, if you're afraid because when you walk out here, you see a homeless person asking you for money, if you're afraid because you see the same smash and grab on the TV every day, if you're being told every day that Haitians in your neighborhood are eating your pets over and over and over again, that's called a nudge. That's nudging you in a way to do things like have more punitive measures in criminal justice. There's a better way, and my law provides those off-ramps to be able to do that and to deal with retail theft in the most effective way. And the last thing I'll leave you with, look, I'm progressive. I never, ever get any awards from the business community. I never, ever get any awards from the chamber. And the retailers, oh my God, I won't even tell you what they say about me up in Sacramento. But my organized retail theft bill is the first time I became Assembly Member of the Year, and the chamber gave me an award for what I did. So I know it was on the right track with business and others.
Well, Reggie, this is business in here. And we brought you here not because you're my frat brother, but because of the great work you've done over the last 12 years. So in parting, is there any advice that you would give to incoming assembly members and anything that you want to say to the group here?
Look, there are going to be new people there. And one of the things that you've got to understand, for some people, it takes a while for them to build courage to be able to move forward with bills. to be able to push it out there. Even when I did the organized retail theft bill, I got beat up by the criminal justice folk because they said, you're trying to lock up a bunch of black people. And I got beat up by law enforcement that said that because of the off-ramps, I was letting people off. So I was in the middle. But at the end of the day, I think I was right. I think it was the right thing to do. But I had to take that beating, that ass whooping for at least a year before finally people caught on that this was the right thing to do. So you need to understand, as the new people are coming in, they want to do great things, but that F-E-A-R, that fear, is real. And when you're a young legislator, new, and what I've always tried to tell them, you're not there to get reelected. Think about what I'm saying, because there's a lot of them that are more concerned about getting reelected than doing the right thing. And when you're doing the right thing, guess what? You may not get reelected. And so we need more legislators of courage and vision than we do those who enjoy coming and speaking to you and eating your food and having a good time. We need ones that are going to do the right thing.
Well, that's why I asked you to do this fireside chat. It wasn't originally planned, but I said I got to bring Reggie in here because, ladies and gentlemen, this man has always been fearless. Like I said, when we were teenagers and going into our early 20s, you didn't line up with the bullies in the fraternity. You always stood and spoke to the right thing. And, we all graduated, right? We didn't just go and party, but we graduated. We went to the library, we did what we had to do, and then we graduated. And then we went into the business world. And when you went into, public service, that's one of the reasons why I walked precincts and got on the phones and, here we are in our 60s, still trying to do the right thing. I want to, first of all, thank all of you in this room for staying here and listening to what Assemblymember Reggie Jones Sawyer had to say, and take it to heart, and remember to vote for people that are fearless, because those are the ones that are going to do the right thing, and that's really what we want, all right? So give him a hand, please. Thank you.